The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases.
And here are your top stories. No holiday cheer. Global stock markets are mixed ahead of U.S. inflation data. Tech faces its worst December since the dot-com bubble burst. Bankman-Fried bail, the FTX co-founder, is released on a $250 million bond, ensuring he's unlikely to await trial behind bars. Plus, China's soaring COVID infections are keeping people home and causing a slump in travel and economic activity. So first thing is first, let's check on the futures. Of course, a lot of the focus is on data out of the U.S. a little bit later on. We have two pieces of news that we're expecting around 1:30 UK time. Our Valerie Teitel will talk to us about it. But in general, European stocks are actually gaining some 0.3%. It's not quite, I guess, the conviction trade. And I don't know whether it is a conviction trade, but certainly it seems that there's a bit more risk on that it is over in the U.S. Now, we did see an index of dollar strength also swinging between small gains and small losses. The yen trimming a weekly rally that was fueled by the BOJ's early adjustment of yield curve control. So let's go straight to some of the other moves that we're watching out for. Now, remember yesterday we did have a slump in U.S. technology stocks and more economic data really validating the case for the Fed to keep hiking interest rates, and that really set a downbeat note. I look at commodities, we should almost on a daily basis. Gold pretty much unchanged, and then you can see some of the European stocks are actually stabilizing. Little gains for the FTSE. Remember, the FTSE, for example, closes at 12:30 UK time. So if you're a UK trader, you can go home nice and early. Cross assets, we talked a bit about treasuries. We also talked about dollar. Overall, again, the focus today is really core PCE deflator, which is a key inflation measured, tracked by the Fed. And then we also have another piece of news. So stocks falling yesterday as strong U.S. data backed further Fed hikes. The S&P 500 fell as much as 3% before recovering into the close. Bloomberg's Valerie Teitel now joins us with the very latest. So Valerie, what stood out? Good morning, first of all, but what stood out in the U.S. data that impacted stocks so negatively?
Good morning, Francine. There was two notable things out in that GDP data that really sunk stocks yesterday. They fell nearly 3% intraday. The NASDAQ fell 4% intraday, alongside two-year yield rising. It's the same theme that we keep hearing all year. The U.S. economy is too strong. It's not boding well for inflation declining, and more Fed hikes might be in the cards. But let's dive into that U.S. GDP data. There were two things in that GDP print that really shook the markets a bit. One was that it was revised quite higher, and for a third GDP print, we normally don't see steep revisions like that. In my next chart, I can show you the component breakdowns. It was driven by firmer spending. That's firmer consumer spending. Again, a better consumer probably means that as we head into next year, the labor market is still going to stay tight as businesses aren't letting off workers. There was also a PCE inflation print in this GDP number that was also a 0.1% higher than expectations. Again, spooking markets that maybe this disinflation theme, this immaculate disinflation theme we're hoping for that might suffice in Q1 next year will be a bit harder for the Fed to fight.
So, Valerie, what was notable about the jobless claim numbers?
Yeah, so the jobless claims numbers, they come out on a weekly basis, and there's always a few discrepancies in the data, but a lot of the attention was on this continuing claims number. It has been rising, but yesterday's showed that that trend might be stopping. So we had a tick down in the continuing claims. These are people who are continually looking for work. So, you know, how many weeks, how many months does it take them to find a new job? We're hoping that we see some softness in the labor numbers, that these continuing claims numbers rise alongside initial jobless, but they're both showing, you know, that the labor market is still strong. The 425 basis points of Fed hikes has not yet to dent this market. And why do we care about that, Francine? It's because wage growth at 5% is not going to be consistent with the Fed going back to its 2% targets. We really need to see some real weakness in the labor market in order to turn the corner on wage inflation and hopefully return CPI to 2%.
Yeah, and we also have that U.S. inflation data out today. So what should we be looking out for, Valerie?
Yeah, we get two pieces of inflation data out today. One is the Fed's favored measure of inflation, the PCE deflator. That's out at 1:30. Now, the PCE data is a businesses survey rather than the CPI, which is consumers, and the PPI, which is producers. But we'll be really looking out for any softness in the core services metric. Again, this all goes back to the tight labor market, a tight labor market reflecting high wage inflation. A lot of the costs in delivering those core services is wages. So if we see any softening in that core CPI number, or sorry, that core PCE number coming today, perhaps equities will end the year on maybe a positive bounce. We also get the UMISH survey at 3 p.m. and as we know, that has the inflation expectations component that will be hotly watched. But as we know, oil prices have really declined over the last few months, so we'll probably see some softness in those survey numbers later at 3 o'clock.
Valerie, thank you so much. Valerie Teitel there with the very latest on these markets. Now joining us, Raffaella Tenconi, Chief Economist and founder of ADA Economics. Rafael, thank you for joining us. 2022 was, and this is an understatement, quite aggressive in terms of repricing, in terms of the shock that inflation took not only markets, but certainly central banks by surprise. What will be the biggest surprise for 2023?
Hi, good morning, Francine. I think for 2023, the ECB is still going to be the biggest surprise because Eurozone bond yields still need to reprice a good 100 and 150 basis point up. And Eurozone will surprise both in terms of stickiness of inflation and resilience of the economy given the circumstances. But if you're talking about the nearer term, I think the best surprise for the market will be to see US inflation surprising on an easing path in the very first part of the year.
So, Raffaella, overall, could we see inflation, though, fall as quickly as it came in 2022?
No, you can't see U.S. inflation slow down very rapidly in the first half of the year. That it's driven probably by the fact that you will see the U.S. labor market slowing down, and there is a broadening of machine learning pricing techniques, which is going to make pricing strategies more responsive to demand. But this is the first half of the year. We still think that inflation is a long-term problem. So it's a short-term good news, but not a long-term change of trend.
Do you think the U.S. will disappoint?
In terms of economic recovery, well, we do expect a shallow recession, definitely. We think, in general, both U.S. labor market and Eurozone labor market are going to be very tight because there are long-term trends that we have begun. You know, digital transformation, reshoring, energy transition, all of these things are unfolding as we speak and require a lot of labor. So in this economic downturn, you cannot see the same amount of slack that you've seen in previous downturns. But I mean, if you're talking about Q1, definitely you will see job losses.
Overall, are you, Raffaella, really surprised by, you know, the consumer holding up, not only in the U.S., but across the board, given how much this recession is telegraphed for next year?
Well, we're very surprised that we see almost a turnaround in consumer confidence already. We thought we would begin to see it in Q1, so it's quite incredible that we see it already. Consumer confidence in the US and a lot of Europe is essentially showing that inflation expectations have come down. unemployment fears are stabilizing and savings buffers are beginning to stabilize. So it's quite an achievement given that inflation is still very high. But generally speaking, if you're talking about the GDP print that came out yesterday, well, that was still with a backdrop of a really resilient economy. You know, Q4 is when financial conditions really began to tighten. And I think Q1 is when you will actually see job losses, because we all have Christmas and, you know, let's say we have spent for Christmas.
Yeah, and then so I guess it's the credit card bills also in January that could make it much more difficult going ahead. We saw global repricing of assets. Does that continue in the next 12 months?
Yeah, we think U.S. stocks are still fundamentally overvalued given this macro backdrop. EU, it's more controversial actually. EU Euro stock could surprise to the upside next year, even with a complex background. But in terms of, you know, the dynamics of GDP, look, the fact that consumer confidence is stabilizing means that you will see a shallow downturn in consumption, but a protracted underperformance, right? Because the key variable here is not the job losses per se, but the loss of real purchasing power, because there is no way that you will see positive gains in terms of wage growth in 2023, possibly in part of 2024. But in terms of investment, I think, sorry.
No, sorry, go ahead.
I think you will see investment industrial sector really outperforming the business cycle because they need to fund and deploy these big transitions that we've begun.
Rafaela, we started talking, of course, you started by saying actually the biggest surprise in 2023 could come from the European Central Bank. What to do with the BOJ? So we had some inflationary pressures today, again, almost validating what the shock that Governor Croda gave to the markets on Tuesday meant for the future.
Yeah, I mean, I think the BOJ is interesting, and it's a good alarm bell, first of all, in the sense that in 2023, a lot of the adjustment comes through bond yields. Maybe you don't see rate moves as much as you think, but because we have quantitative tightening deploying, in the case of Japan, you know, outright guidance of what is going on, that is what worries us the most in terms of the Eurozone. You know, if these central banks don't allow bond yields to reprice high enough, then they will have a bigger exchange rate problem going forward. I also find that the BOJ is interesting for the Bank of England because the truth is that the UK has an enormous structural problem for inflation, and I don't think it can afford to have the high rates it needs to bring inflation down. So it may eventually end up in a situation of permanent QE, even with high inflation.
So is that, I mean, that will be basically also a divergence play between the ECB and the Bank of England, which we're seeing more and more.
Yeah, absolutely, absolutely. So I think the divergence comes from the fact that all these countries have a long-term inflation problem, but in the next 6 months, you know, some of them will show better responses than others, but they have divergence, fundamental leverage. UK and US are very levered. Right? So it becomes socially almost impossible to really deliver the Volcker strategy that everybody hopes to see. Whereas in the Eurozone, fundamentally, households are still cash rich. And if you have high bond yields, it probably delivers more of a wealth effect to households than you think.
Rafaela, as always, thank you so much for joining us. Rafaela Tanconi, their chief economist and founder of ADA Economics. Now, coming up, FTX founder Sam Bankman-Fried makes his first appearance at a U.S. court to face fraud charges over the collapse of FTX. The latest on that next, and that's just ahead. This is Bloomberg.
more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
They've raised their inflation forecast.
Firm and immediate action.
He wants to destroy my country.
Elon Musk to buy Twitter.
Overturned Roe versus Wade.
Boris Johnson will call it
Donald
quits.
Trump's plan to overturn the
unprecedented search warrant at the home of our former president.
Queen Elizabeth has died.
Xi Jinping got his third consecutive term.
The pound falls to an all-time low.
The shortest ever serving prime minister.
Presidents Biden and Xi shake hands.
FTX filed for bankruptcy.
The red wave that never was.
Protesting his zero COVID policy.
Welcome back to the Open, everyone. 15 minutes into the European trading day. This is a picture across the board. We're seeing a bit of a reversal. A lot of these stocks are pretty much flat. I'd say the European stock 600 are holding on to gains, but frankly, they're not. They're just very, very, very small gains. Now, Sam Bankman-Fried has been released on a $250 million bail package after making his first U.S. court appearance to face fraud charges over the collapse of FTX, a cryptocurrency exchange he co-founded. Let's get straight now to, of course, the latest on this from Bloomberg's crypto senior editor, Anna Herrera. Anna, thank you for joining us. So what can you tell us?
So he's been released. It's a very big figure, 250 million on bail. Obviously, people might be wondering, does he have 250 million? They're actually normally not. There isn't as much money in that you have to put up. It's normally around 10% of assets, and it's also secured against his parents' house, which is probably not worth 250 million. So it's a little bit less. They're normally this big, and this is one of the biggest in pre-trial because it dissuades you, presumably, from running away. It's obviously, the images are quite stunning. Only 2 months ago, no one would have really been able to predict this. And it's been a swift sort of descent for Bankman-Fried, who was like the top of the industry only 2 months ago.
It is actually really quite incredible. I know there's, a lot of people out there saying this is like a Hollywood film. You just can't quite believe how it unraveled so quickly. So, Anna, what's the next step? He's on bail, and this is because it's secured to an apartment that his parents have, I believe. And then so he could stay there, and then something happens back in January.
Yes, he's going to be back in court on January 3rd. He still hasn't pled. We know yesterday there was news that his top lieutenants, Carolyn Ellison, who was the CEO of Alameda Research, the hedge fund, and Gary Wang, the CTO of FTX, are collaborating with authorities and have pled guilty. So, we have to see if anybody else is called in as well, and sort of what he will do on January 3rd.
Are we expecting to hear from him, Anna, before, I don't know whether there's a trial that could start quite soon, or exactly how the justice system will handle this?
I think he's supposed to appear on January 3rd. I don't think there'll be any updates from then. I'm not sure whether people normally talk when they're released on bail. But yeah, we can expect to hear something then. And obviously, there's Christmas over the weekend, so everybody, I suspect, there might be a pause.
Yeah, I mean, I don't think usually people talk, but, people haven't talked in the past when there was an investigation, and he's given quite a few media interviews, so let's see. And I know I ask you this almost every week, but, when you look at the fallout, and this is, a largely unregulated space, so we don't actually know the domino effect, how long, given what we know and what we found out in the last 2 weeks, how long do you think it will take for us to truly understand, the significance of this in terms of second and third order effects?
We still don't know who the big creditors are. That's a big thing, because obviously if we find out that there were big counterparties to Alameda or FTX or any one of the 130 companies that filed for bankruptcy, or entities that filed for bankruptcy, that might cause more crisis of confidence in those companies, and there might be more sort of liquidity issues elsewhere. So I think, we might be in a sort of phase where everything looks a bit calmer just because the holidays are approaching, but we have to wait. This has started, this started in May, really, when Terra collapsed, and that triggered sort of liquidations everywhere and margin calls. And, we saw how the system was way over leveraged. So we might have a little bit more to come.
Thank you so much, Anna Herrera, there, Bloomberg senior editor, of course, on crypto. Now, Scott Minerd, Chief Investment Officer at Guggenheim Partners, has died aged 63. Minerd was regarded as one of the kings of the bond market during its 4-decade bull run.
Scott Minerd climbed the corporate finance ladder to become a founding and managing partner at Guggenheim Partners. Minerd was regarded as one of the most respected voices on the fixed income market over the last decade, and a much sought-after guest by financial media, including Bloomberg Television, for his view on markets. Minerd's first job was at Price Waterhouse, which gave him the opportunity to analyze hundreds of financial statements, something that benefited him later as CIO for Guggenheim. While still in his early 30s, Minerd became the global head of fixed income at Credit Suisse, working for legendary investor Bob Diamond. Despite his incredible early success, at the age of 37, Minerd decided to move to LA with plans to retire. But in 2000, Minerd met members of the Guggenheim family and became one of the founders of Guggenheim Partners. In a statement, Guggenheim Partners CEO Mark Walter said Scott was a key innovator and thought leader who was instrumental in building Guggenheim Investments into the global business it is today.
It probably affected the way I looked at all investments going forward, which was not to just listen to the conventional wisdom of what everybody else was saying, but to take what they were saying and, actually, really in reality challenge it.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Welcome back to the Open, everyone. We are 23 minutes into the European trading day. The picture across the board is one that's a little bit mixed, and it was certainly 15 minutes ago with the European stocks practically unchanged, but slightly on the upside, and the CAC 40 down 0.1%. Now, the focus firmly is, of course, on that inflation data in the U.S. Now, let's get straight to the Bloomberg Business Flash. And BHP is to stand trial in the U.K. over a 2015 dam collapse in Brazil that killed 19 people. A judge set a trial date of April 2024 to hear the claim on behalf of around 400,000 litigants seeking an estimated £10 billion. Now, according to the firm representing the claimants, it will be the largest group action in English civil court history. Elon Musk says he's not planning to sell any Tesla shares for at least 18 months. Now, speaking on Twitter Spaces, Musk also said he favors a share buyback once the company is more confident in the direction of the economy. Now, the Tesla chief executive has offloaded almost $40 billion worth of stock this year, mostly to fund his purchase of Twitter. Bloomberg has learned that China plans to cut quarantine requirements for overseas travelers from next month. Now, under the new rules, arrivals from abroad will only be subject to 3 days of monitoring. China currently requires travelers to quarantine at a hotel or other facility for at least 5 days after arrival. And early data suggests that fans spent big at this year's World Cup in Qatar. According to Visa, the event's official payment provider, fans shelled out almost 40% more in stadiums than they did at the 2018 World Cup in Russia. Well, the data includes spending via Visa-branded cards, the only ones accepted in the venues. And that's your Bloomberg Business Flash. Let's also get to some of the movers in today's trading session. Again, these are not maybe the mainstream names that we would always talk about because we're seeing thin volumes. Also a reminder, if you're a trader on UK stocks, actually the FTSE and I believe also the FTSE 250 will close at 12:30 today. So you have a nice half day off. This is what we're looking at in terms of movers. Now, Bavarian Nordic. We should maybe spend a bit more time on Bavarian Nordic than we do. Now, it did enter an agreement with the U.S. Department of Defense for vaccine development. It's also kept its financial guidance for 2022. You can see Bavarian Nordic gaining 5.5%. Now, Philips, this is something we talk about a lot more, but it says tests on recalled products show limited health risks. So there's a bit of support thanks to Philips. And then Sodexo, of course, one of the biggest catering companies in the world. They provide a lot of the food, for example, to our troops abroad. Sodexo down 3.9% in today's trading session. Now, this is actually on the back as they're extending, I think, their global pact with Tetra Pak. Coming up, new data shows that China's COVID wave is pushing its economy off a cliff. We'll discuss how that might weigh on the global economy into next year. This is Bloomberg.
Somebody says, I want to be, and a person has an impact on society, what would you recommend that somebody do to train themselves and to work their way up to be somebody that's impactful on society?
Well, I think the first thing you've got to believe in something that you really care about. You know, I've been fortunate that over the course of my career, I've come up with things that have mattered to me, and I've pursued them. You know, the best advice I ever got was from Mike Bloomberg. And he said to me at one point, he said, show me somebody who's never lost, and I'll show you a loser. And I believe that if you believe in something, go after it, take risk. Obviously, they should be smart risks, but they should be around things that you really care about.
So you would see your legacy as being actually target ALS and helping to moderate the impact of ALS, if not curing it.
That's my final legacy. I'm proud of some of the other stuff that I've done as well. Transformation of New York after 9/11. I'm also incredibly proud of a lot of the companies we created at Sidewalk, but I feel like I've done a lot.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. No holiday cheer. Global stocks markets are mixed ahead of U.S. inflation data. Tech is actually facing its worst December since the dot-com bubble burst. Bankman-Fried bail, the FTX co-founder, is released on a $250 million bond, ensuring he's unlikely to await trial behind bars. Plus, China's soaring COVID infections are keeping people home and causing a slump in travel and economic activity. So let's look at these markets. I mean, they're not dull, but we're also not seeing crazy volumes. So take it with a pinch of salt, which is also why we're seeing quite a lot of fluctuation. They were up, they were down, and now they're gaining a touch. European stocks getting some 1/10%. Of course, the interesting move yesterday, what we saw in the markets after data, is pricing in a different Fed, maybe a little bit more hawkish Fed. And then we look today at University of Michigan data, and of course, inflation. The picture across the globe in terms of the sectors on the move here in Europe are very similar to what we saw over in Asia. If you're a technology analyst, today you're probably trying to figure out what happens for 2023, but you haven't had a great month if you're an investor in some of these technologies. So telecom was some of the biggest gainers, 0.6% higher. Healthcare also gaining 0.5%. Remember, Bavarian Nordic is one of our top movers. That's one to really watch out for today. And then technology, travel, and energy on the way down. Now, China's soaring COVID infections are keeping people home and causing a slump in travel and economic activity. The COVID wave has heaped even more misery on the global economy, which, according to Bloomberg Economics, is already set to experience one of the worst years in 3 decades. Now, to talk about all of this, we're now joined by Jamie Rush, Chief European Economist at Bloomberg Economics. So, Jamie, how does Bloomberg Economics see the global economy holding up in 2023?
Well, I think what we're reminded of with China is that COVID restrictions hurt GDP, but so too does uncontrolled spread of the virus. But I think more broadly, looking ahead to the 2023 for China, we're expecting the easing of these restrictions to be long-lasting and to lift GDP substantially. So we're going to see a bounce in growth in China towards about 5% from around about 3% this year. But that's more than offset by weakness in the advanced economies like the UK, the Eurozone, and of course the US. And that 2023 is going to be the year that we see the impact that monetary policy tightening has had on the global economy, and it's going to be substantial.
So what have we learned about inflation in 2022? I mean, a lot of people didn't forecast the severity and how fast it came up.
That's right. So I think what we've learned about inflation on the US side is that it's a bit stickier than people anticipated, certainly on the core measure We have seen labour costs picking up substantially, and that's going to take quite a while to come down. So it necessitates a lot of action from the Fed. One thing that's changed in our understanding of inflation over the year, though, has been that the shock to Europe has not just been energy, there has also been some demand there as well. So we've seen that big shift in the perspective of the Bank of England and of the ECB, and it's why they've embarked on significant tightening cycles. Bank of England is pretty clear-cut, wage growth 7%, it's going to have to do something about it. ECB, much less clear. We don't have all that clarity on what's going on with wage developments in the Eurozone, and that remains to be seen. It's going to be a big area of uncertainty going into the first half of next year.
So, Jamie, what does it all mean for rates?
Well, I think we're looking at something like close to 5 for the US, close to 4 for the UK, and close to 3 for the Eurozone. I think that's where we're headed based on the current trajectories for inflation, but we could see a bit of a rejigging there if it turns out the problem in Europe is bigger than people realise.
And looking forward to next year, what could go right?
Well, I mean, I think so. One possibility is it's hard to imagine it right now, but that the Chinese reopening happens a bit faster. That could lift growth to 6% instead of 5% that we have in our forecast. And more broadly, we've seen that the energy costs have come down a lot in Europe, which is going to spare some of the worst misery over the winter. It's possible that we might see inflationary pressures recede relatively fast in the Eurozone, and that might in fact mean that the ECB has room to kind of pivot to a more dovish stance earlier in the year than people are expecting.
Jamie, out of all the major central banks, and I know we had the shock by Governor Kuroda, and that seems to have been supported actually by inflation data in Japan today, but who do you think will be the most interesting or surprising central bank in 2023?
I really think it's the ECB. Because we just don't have the clarity on what the underlying picture is like in the Eurozone economy. You have this huge uncertainty about how deep the recession is going to be. You have massive uncertainty about how monetary policy is going to transmit across the 4 big economies of the Eurozone. And we have a central bank which can't quite make up its mind whether it wants to be super dovish or super hawkish. I mean, obviously, we've seen a big shift into the hawkish camp. Is 2023 the year that we start to hear a bit more from the doves as the economy starts to weaken off? So I think that is the central bank where there's most at stake for a big change in direction next year.
And I guess if you're an international investor, you look at the ECB and you look at the BOE and you say, look, they have similar problems, maybe in the UK a little bit deeper, but they also seem to be really diverging. Is that one of the biggest plays for 2023?
Yeah, I mean, I think it could be. I mean, just that we as we say, we have that sense that the economy is very, very hot in the UK. Labour market's extremely tight, and the ECB certainly believes the labour market is tight in the Eurozone. But the evidence isn't quite as clear cut there. So I think that is going to be one of the big things that drives change. I mean, the other thing is that the scale of the monetary policy tightening is so big that the impact on the economy, we know, is going to be large. But it's possible it could be even larger than that because we just haven't seen this sort of change in rates since the global financial crisis, even before that. So it's a real period of heightened uncertainty, extreme risk to global GDP growth.
Okay, Jamie, thanks so much for all of your insight. Of course, Jamie Rush, Chief European Economist at Bloomberg Economics. Now, with a recent breakthrough, U.S. scientists were the first to generate a nuclear fusion reaction that created more energy than it consumed. Billionaires such as Jeff Bezos and Bill Gates are already investing in the technology. We look at whether it's the answer to the world's clean energy needs and when it might be commercially available. Our Guy Johnson reports.
After more than 50 years of failure, scientists have taken a major step closer to achieving near limitless clean energy. On December the 5th, researchers in California succeeded for the first time in generating more energy from a fusion reaction than it consumed.
This fusion breakthrough will go down in the history books. This shows that it can be done, which has been a question. Can you get there?
Commercial viability is probably still decades away, but this new technology has huge potential. According to the Fusion Industry Association, each pound of fusion fuel could produce as much energy as 10 million pounds of coal. But what is fusion? Nuclear plants today use fission, where an atom is split to produce energy. Fusion does the opposite. 2 atomic nuclei are combined to create a heavier atomic particle, with the reaction giving off energy. It produces no nuclear waste or dangerous radiation. A disaster like Chernobyl isn't possible. Billionaires like Jeff Bezos, Bill Gates, and Peter Thiel are already investing, and startups have received almost $5 billion in funding, with Bloomberg New Energy Finance predicting $1 billion this year alone. But not everybody is a believer. Elon Musk, a co-founder of renewable company Solar City, has said that solar and wind costs are falling so fast that fusion energy will be a dinosaur by the time it's viable. But for now, the breakthrough has sent a major jolt of excitement through the scientific community, energy that surely won't go to waste.
Bloomberg's Guy Johnson there on the breakthrough and future of nuclear fusion. Coming up, how has this year fared for UK stocks? We discuss the winners and losers next. This is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Open, everyone. 41 minutes into the European trading day. For the moment, we're holding on to little gains. The European stock 600 gained 0.2%. Now, tech firm valuations have taken a beating this year as expensive growth stocks lose favor with investors. Bloomberg's Tom McKenzie spoke to Tanya Bowler, the chief executive officer of UK-based health tech company Elvi. He asked her about the challenges that the business has been facing from supply chain issues, smaller growth, and Brexit barriers.
Definitely slightly reduced expectations on growth. So having gone from, to be honest, around circa 100% year-on-year growth, this year we're looking at about 25%.
How well capitalized are you? How challenging is the funding environment?
I'll be honest, it has definitely been difficult this year. I think overnight investors have really moved away from anything with the discretionary spend. But for us at LV, one of our key channels also is health insurance, particularly in the US. So that's very repeatable and predictable income. So we've managed to weather that storm. Luckily, we have a group of investors who are there to support us for the long term.
Okay. And you mentioned the supply chain challenges. Are we at a point now where those have been addressed? Are we back to kind of pre-pandemic levels in terms of supply chain efficiency, or are there still areas that are holding back the business?
Yeah, there's still, I wouldn't say there's full efficiency across the supply chains in general within consumer electronics, but we have at least seen a real switch from there obviously being a real supply issue within Asia, particularly on components and manufacture. Asia has now ramped up to meet that demand, but we're still seeing a lot of inefficiencies.
I want to focus a little bit on the UK before we let you go. The regulatory environment here, you're a successful London-based European tech company with your roots in the UK. What more can this government be doing to support businesses like yours?
I think it needs the support at every different level. You know, we have a really vibrant ecosystem here in the UK. We have a lot of experience in terms of both now on the investor side and on the other side of the table in terms of entrepreneurs. But for entrepreneurs themselves, we need more entrepreneurs to choose London as that place to set up their businesses. So, for example, entrepreneurs tax relief, that has been cut. I would suggest that needs to be there as an incentive so that entrepreneurs are choosing London over Paris or Berlin. After that, obviously, we need top talent, and for that, we need to be looking again at, you know, the immigration and allowing the tech that we know we need the tech talent to come into this country. And thirdly, I would say in terms of trade, we need, you know, we're a British company, we're exporting. We need the UK government to be looking increasingly at those export barriers that we're all facing now as British businesses.
So that's a nod to Brexit, the Brexit effects, and that is a negative, that is a drag on your business.
Absolutely, yeah, Brexit has impacted all UK businesses who export into Europe. It's also just increased paperwork and bureaucracy in terms of how we can export, as well as obviously the increased taxes.
Are you able to quantify the Brexit effect on your business?
We haven't been able to quantify it, but for us, so essentially our main markets were the UK and the US, and then we had plans to go into Europe. But with everything that's been happening with Brexit, it just makes us relook at those plans and make different decisions.
Okay, final question. The UK Chancellor has said he wants to turn the UK into the next Silicon Valley. In your view, sitting here as an entrepreneur in London, is that realistic as an aspiration?
Absolutely. You know, we did our fundraise last year. It was the largest fundraise for Femtech. It beat anything in the US as well, and that just shows the level of commitment, investment, and passion here in the UK.
Well, that was Tanya Bowler, the Chief Executive Officer of UK-based health tech company Elvie. Now, UK stocks having a wild year. Some have, of course, fared better than others. To tell us who sunk and who swam, we're joined by our stocks reporter, Joe Easton. Joe, good morning. Clearly been a tough year for UK stock markets broadly. Which are the individual worst performers that stand out to you?
That's right. So there's plenty of big decliners this year, as you'd expect in a really bad down year for the UK market. I'll run through a couple that really stood out to me, and some of them have the same problem. They've got big debt loads. So I'm talking about ASOS, Aston Martin, and also 888, three of the stocks you see on the screen there. As I mentioned, huge debt loads, and with those interest rates going up, that's putting pressure on their financing. But they've also got their own individual problems as well. People trading down with ASOS, buying the cheaper clothes for their party wear. Aston Martin, we always seem to talk about at the end of the year having a really bad year. Another terrible year for them. Finally seeing a bit of demand for their cars, but the debt load is the key concern. And then William Hill was purchased by 888, which we have on the screen as well. As we see, they're down 72%. Investors didn't like that deal because it meant they had to cancel their dividend and also issue some junk debt. So some really big decliners on the screens here. I'll just go through a couple of others. So Wetherspoons also stood out to me. The pub trade is having a tough time. Energy prices going up. Keeping beer cool is becoming a lot more expensive, and also having to pay higher wage costs. Those are the ones that stand out to me, I think, Fran, over the past 12 months.
Yes, is there anything, I mean, when you look at the most impressive winners, I know there are some that are fairly intuitive, and then others I probably wouldn't have expected. What about you?
That's right. So the one that really stands out is H&T, and this is a pawnbroker, so one that doesn't pop up too much. Obviously quite a difficult situation for a lot of people having to pay higher bills, higher energy bills, higher mortgage rates. So they're looking to actually cash in on some of their valuables and take out loans. So a bit of a poor situation, not good when that's the best performing stock on the market. Also BAE Systems, another one that's really been driven by the macro picture. Obviously with the war in Ukraine, countries around the world are having to increase their defence budgets, and therefore firms like BAE and also Kinetic Q, they're doing well. And Pearson just coming up on the screen now as well. That stock up 58%. So this company used to own the Financial Times. It was quite a high-profile firm a few years ago. They sold that. They moved into virtual education, which really boomed throughout the pandemic, and that's continued into this year as well. They rejected a couple of takeover bids from Apollo in the year as well, and that sent the stock even higher. Those are the ones that stand out on the screen there to me, I think, Fran, over the past year.
So, Joe, what happens next year? What are the UK stocks or maybe UK sectors that you think could be attractive next year?
That's right. So I think the home builders, I always seem to come back to the home builders, but I do think that they are trading way below their book values now. They're suggesting that home builders will have to write off the value of their land in the way that they did during the financial crisis, which seems very extreme. I pick out a couple of other ones that I think are interesting. I mentioned to you earlier my love for Wagamama's, so I'm putting Restaurant Group in there as a stock that could go higher next year. And also Barclays, I think, not so exciting as a restaurant company, but it is a really international company, and I think too much of the negative UK picture has been priced into Barclays stock, and some investors might relook at that next year if the UK picture starts to turn.
First of all, congratulations to everyone who has only half a day off today, because Joe reminded me also that UK markets close at, what, 12:30, Joe? And then when you look at, I guess, the impact that sterling has had on some of these stocks, are you expecting as much volatility next year?
Yeah, so I think, first of all, I'm as happy as anyone about that early close. I mean, I think there's only 2 days of the year, this Friday and next Friday, where we close early. So I'm going to remind my manager of that when I get back to my desk. But yeah, the sterling rate I do think will be important. A lot of companies are dependent on the imports, and with the pound being weak, it's making their overheads a lot costlier. Also, we're kind of importing inflation for a macro picture with the weak pound, and therefore it's harder for the Bank of England to ease off the interest rates. So if sterling recovers, it makes the Bank of England's job easier. Interest rates could come down, and then we might see an outperformance in some of those domestic stocks that I mentioned, like the retail, restaurants, home builders, and the domestic banks as well. So as you mentioned, the pound is really important going forward.
Joe, thank you so much. Our Bloomberg stocks reporter, Joe Easton. Coming up, it's been a wild year of market-moving news defined by lightning-fast inflation, a war in Europe, and recession anxiety. So we'll look back at some of the biggest moments of 2022. That's next, and this is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg.
So 2022 was quite the year. Here's Bloomberg's 2-minute roundup. In January, the Federal Reserve laid the groundwork to raise rates to tackle the fastest inflation in a generation. Adding to global inflationary pressures, Russia's invasion of Ukraine. The attack began in late February and dominated headlines, from the destruction on the ground to U.S. sanctions on Russian banks and oligarchs. By March, attention zeroed in on the specific threats that Russia posed, restricting the flow of natural gas to Europe and attacks near a nuclear power plant in Ukraine. Corporate drama started to pick up in April when Elon Musk made a $43 billion offer to take Twitter private, while Netflix reported a loss in subscribers and changed its strategy to embrace advertising. The theme in May, market mayhem, as the Fed boosted the size of its rate hike to 0.5 percentage point, sending U.S. stocks to 13-month lows, while a single trader at Citigroup made a mistake that sparked a flash crash in European stocks. Recession fears took root in June. Half the headlines of Bloomberg's 10 most read stories that month featured the R word. Another R word, Roe, after the Supreme Court overturned Roe v. Wade. Geopolitics were the big stories over the summer. The killing of former Japanese Prime Minister Shinzo Abe, and Nancy Pelosi defying China when she visited Taiwan. The UK lost its longest-serving monarch in September. 2 weeks later, the new Prime Minister unveiled unfunded tax cuts that caused the pound to crash. In October, Credit Suisse became a meme stock, setting new lows as some retail investors bet the bank would go bust. While Xi Jinping consolidated his power, adding more loyalists to China's leadership. Crypto winter arrived in November when FTX collapsed, destabilizing the industry. And by December, bankers were tallying up the costs from slumping markets, sparked by the Fed's rate hike campaign. Their wallets will take a hit as Wall Street firms prepare to slash year-end bonuses.
Well, that was Bloomberg Quick Take. Scarlet Fu reliving some of the biggest Bloomberg headlines from the last 12 months. Now, let's also take a look at the key things that markets are watching out for today. We've already gotten an update on the Spanish economy with GDP numbers coming in as expected. At 1:30 p.m., we get a fresh batch of U.S. data, including consumer income, home sales, and durable goods. Later, 3 p.m. UK time, there's more data out of the U.S. with the latest release of the University of Michigan Consumer Sentiment Index. And it's another day of strikes across Britain, this time from border Air Force officers. About 1,000 are walking off the job today, creating a potential travel chaos at airports around the country. Now, let's also get to the Bloomberg First Word News, because the House committee investigating the January 6th attack on the U.S. Capitol has delivered a scathing report blaming, quote, one man, former President Donald Trump, for inciting violence in an attempt to hold onto power. The 800-page report details Trump's behind-the-scenes fury and his efforts to pressure state officials and the Justice Department to overturn the presidential election. Bloomberg has learned that China plans to cut quarantine requirements for overseas travelers from next month. Under the new rules, arrivals from abroad will only be subject to 3 days of monitoring. Now, China currently requires travelers to quarantine at a hotel or other facility for at least 5 days after arrival. And once-in-a-decade winter storm is battering much of the U.S. with snow and freezing temperatures. More than 3,500 flights have been canceled so far, with those through Chicago and Denver worst affected. The American Automobile Association also says 112 million people plan to travel at least 50 miles at some point over the holiday period. And that's your Bloomberg First Word News. We'll have plenty more on European markets and surveillance. Early edition, that's up next. We talk, of course, about China. We'll look at the UK in 2023 and beyond. This is Bloomberg.
There's an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then destroy you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London. Here's what's coming up on today's program. No holiday cheer. Global stock markets are mixed ahead of U.S. inflation data, while tech faces its worst December since the dot-com bubble burst. Bankman-Fried bail. Well, the FTX co-founder is released on a $250 million bond, ensuring he's unlikely to await trial behind bars. Plus, China's soaring COVID infections are keeping people home and causing a slump in travel and economic activity. So first thing is first, so let's check in on the markets. Now, we started the day a little bit higher, then we went lower, and today actually we seem to be holding on to some gains. All of this excitement over the holiday period is also making me lose my voice, but that has been regained, I assure you. Now, a couple of things we're watching out for is, of course, data over in the U.S. Again, global stock markets today are a little bit mixed ahead of that U.S. inflation data. U.S. futures actually fluctuating a little bit. The moves, of course, come through after we saw U.S. session yesterday when a slump in U.S. technology stocks, but also more economic data validating the case for the Federal Reserve to keep hiking interest rates set a pretty downbeat tone. For the moment, I would suggest we're actually trading sideways. Now, the number of Americans filing new claims for unemployment benefits increased less than expected last week, pointing to a still tight labor market, while economic growth in the third quarter was firmer than previously estimated. We're now joined by Nick Scullion, he's partner at Foresight Group. So, Nick, great to have you on the program. Thank you so much for coming in. So, first of all, you're in the private equity space, right? So we talk markets, but what are you expecting from private markets in 2023? We haven't really seen the downbeat message that we heard in equities, but I wonder whether that's still to come.
Yeah, I think private markets are actually operating slightly separately from public markets at the moment. I think there's obviously a lot of expectation around what the Fed's going to do around interest rates and how that's going to land in the economy in America, but also, of course, around the world. Central banks are having to react to what's happening with inflation. Clearly, we see inflation as the most important thing in global markets at the moment, both in terms of pace, but also its underlying drivers. Yeah. So I think private markets are going to respond to that in the course of 2023 as we get some of that data coming through.
So, Nick, we'll talk about inflation in a second, but do you worry about a liquidity crunch or something happening, which, you know, we've seen maybe in 2022 in certain parts of the market? Could it impact and infect private markets?
Well, what we've seen in 2022, actually, I think has been a good functioning of the markets. We haven't seen what we saw in 2020, where we saw really some sort of market failure. I think in 2022, liquidity has been good. In the companies that we've been buying in public markets within our open-ended funds, we've seen that they've been trading efficiently, so we're not concerned about that at the moment.
Mm-hmm. So talk to me a little bit about inflation. If you look at inflation 2022, I mean, this was the big surprise. It took, frankly, almost everyone off guard, unless you're like a genius of I guess, economic analysis. Could it come down as quickly as it came up?
Well, I think that's the key question, isn't it? So everyone's really too hung up on peak inflation. So where is inflation going to peak, and are we coming down? I think what the real question is now for central banks is, are we going to get stuck on a ledge on the way down? So as we head down to policy target rates, are we going to get stuck halfway, and what are going to be the drivers of that? Because very quickly the Fed and other central banks could be out of options if that does happen.
Yeah, do you think that happens? I mean, what's the probability?
I think it may be difficult for inflation to get back to policy rates without a very hard landing. So our base case at the moment is not a soft landing. There are growth outcomes where that's possible, but for the moment we think defensiveness is prudent, both within asset class allocations, but also within your individual asset classes. So within equities, for example, we think that being defensive in your allocations, and actually we don't think the growth versus value debate is a very helpful one at the moment. We think it's all about quality of earnings. How much will these companies be able to continue to grow their earnings? Will they get paid by their counterparties? And actually, what is the runway for them in 2023?
So how difficult is it at the moment to kind of wade through the noise to see, earnings growth potential? Also given, I mean, we tend to forget, but there's still this overhang of COVID and lockdowns. So it's unclear when you pull that apart what we're left with.
And I think the overhang of COVID lockdown is compounded by this absolute addiction to free money that we've had over the last 10 years. So those two externalities and distortions are really going to be prevalent in the market in 2023. I don't think that inflation is going to come down beyond sort of 4 or 5% in the next 6 months, and that could be problematic.
Yeah, but so if you break it down, and again, I know you say, look, you like the companies and equities that, where they can pay dividend, grow, so pass on that inflation. I mean, apart from energy, what is there?
Well, where we're looking is at real asset infrastructure. So we're looking at companies that provide critical services to society, whether that's energy, whether it's education, transport. It's the kind of companies which enjoy long-dated cash flows, government backing. They are the ones that have inflation linkage mechanically embedded within their multi-decade cash flows. Those are the ones that I think will continue to be resilient in a very difficult environment in 2023.
Nick, I mean, there's a school of thought, or certainly I've got about, I would say, 20% of economists we speak to that say we could be surprised on the upside in terms of data, so in terms of inflation, maybe not as aggressive as we thought it could be. Does that change everything from where you want to be in the markets?
Well, what we've seen services data, shelter coming down, but also shelter is coming down now as well. So I think we are going to see inflation coming down. I don't think it's going to plummet down from here. I think there are many factors that are still driving inflation, not least the energy crisis in Europe. Clearly that's a supply side shock that central bank policy can't impact. But I don't think that we're going to be back at policy target rate anytime soon, and definitely not without something big breaking.
So how do you play the energy space? Is it through renewables because it gets accelerated, or because we're seeing still so much usage of oil, that's the only place where we can really make money?
Well, the way that we're looking at energy at the moment is we're looking at companies that build, operate, maintain assets that are going to survive and are going to be going to thrive in a decarbonizing and a decarbonized world. So we're looking at companies that benefit from the things like the IRA in the US, where they're getting policy support and they're getting subsidies from governments to actually continue to operate and to deliver on their promises.
So, Nick, what do you do with China right now? Frankly, it's unclear, and always we thought of we think about the people that are sick and that are also, frankly, dying at the moment. In 3-6 months, how do we work ourselves through this?
Very difficult, and clearly China's a big unknown, and for investors that's a problem. How do you deal with that uncertainty? We think that mid-2023 there may be some sort of COVID unlocking in China. Clearly that would be positive for global markets if that happens, in terms of commodity imports and then in terms of emerging markets that rely on those commodity exports. So we think that China is clearly very important in the landscape for 2023. We don't exactly know how the regime there is likely to unlock, but from what we're seeing and from what we're hearing, it looks like mid-2023 might be possible there.
Okay, does that have an impact? I mean, I imagine this has an impact, of course, on your dollar call and therefore on emerging market exposure.
Yeah, of course. So, I mean, the way that we think about the dollar is really everything to do with, is to do with the Fed's reaction to inflation. So that's our primary input there. We do see a a strong dollar persisting throughout 2023 as the Fed is forced to remain on the trajectory that they've indicated that they'll stay on. And it's amazing how the market refuses to listen to that, actually.
How do you do it's true. I mean, the market, why is the market refusing? Because they're too optimistic, or because they just see peak inflation and think they'll temper?
I think the market is expecting a pretty serious pivot once we start to see some of the damage done to the labour market. Clearly, that's a lagging indicator, so it might take 3, 6, 9 months to get there. But once we start to see some of the breaks that Jerome Powell is hoping to enforce on the market, I think they're backing a shift in policy.
So, do you buy any bonds?
No, we don't buy bonds.
It's just not worth it, right?
Well, it's not in our remit at the moment. So we're equity investors, and everything we buy is listed in public markets in our funds. But clearly, the attractiveness of bonds compared to where they were months and years ago is potentially problematic for equity investors as well, as allocators who can buy bonds and who want to buy bonds for the yield swing towards that asset class and away from equities, reducing overall demand.
All right, Nick, thank you so much for coming on. Nick Scullion, their partner at Foresight Group. Now, coming up, FTX founder Sam Bankman-Fried makes his first appearance at a U.S. court to face fraud charges over the collapse of FTX. The latest on that just ahead. This is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
At the Fed are on Bloomberg.
I do see growth slowing, but remember that's part of the mechanism of getting demand into better balance with supply and alleviating those price pressures.
We're clearly not in a recession right now based on the data. It is an economy that is growing only modestly, and I think it's an economy that's really seeing the imbalances between supply and demand diminishing and inflation coming down.
Nobody covers the Fed like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition on Fronting L'Aqua here in London. Now, we are getting some moves at Tesla, actually pre-market rising some 2% as Elon Musk has vowed to pause selling shares, I think, for 18 months. It might be 2 years, but of course we keep on following that story very, very closely. Pre-market 1.8% higher for Tesla. Now, Sam Bankman-Fried was released on a $250 million bail package after making his first U.S. court appearance to face fraud charges over the collapse of FTX, the cryptocurrency exchange he co-founded. Let's get straight to the latest on this from Bloomberg's crypto senior editor, Anna Herrera. Anna, first of all, I read the story. I came in this morning, and I thought, wow, that's a lot of money. Where's he getting the money from?
So he last said he only had $100,000 in his bank account. So we can say that it's not going to be 250 million. There's normally a mismatch between the bail package and how much you need to put in, how many assets you need to put in to secure it. So I think it's going to be around 10%. It's also secured around on his equity in his parents' home, which is where he will be staying during this period. So it's eye-catching, but it's not as big. You don't need to put up quite as much money. It's normally this high because it's a disincentive for you to try to sort of run away. And it's interesting. Again, the lawyer was saying he's not, they don't consider him to be a flight risk, and the judge believed that to be the case because he's well known now. So it would be harder for him to sort of appear elsewhere without being known.
So what information do we know is still coming? Like, what's the timeline out of all of this, Anna?
He's going to appear in court again on January 3rd. He's not made a plea yet. So, his lieutenants we discovered yesterday had pled guilty and are collaborating with authorities. This is Carolyn Ellison, who was the CEO of Alameda Research, the sister trading firm of FTX, which was at the heart of sort of what was going on. And then the CTO of FTX, Gary Wang, who was also a co-founder in Alameda. He also pled guilty. So from that, we learned a bit more about what was going on behind the scenes, which was essentially, there was much that happened, but a fundamental part was that Alameda sort of got into some financial trouble when Terra collapsed in May. It couldn't meet some of its obligations with lenders, and so they started taking more, borrowing more from FTX, so from FTX customers, essentially from the deposits there to cover those losses. And but the crux of the case is that really a lot of the funds that were supposed to be at FTX, because they were their customer funds, were actually misappropriated and used by Sam Bankman-Fried, allegedly, for his own personal use, and then also for the sister trading house, Alameda Research, to trade against.
Anna, thank you so much. Bloomberg's crypto senior editor there, Anna Herrera. Now, Guggenheim Partners Chief Investment Officer Scott Minerd has died. In a statement, the company says a 63-year-old died after a heart attack during his regular workout. Here's a look back at his life and legacy.
Scott Minerd climbed the corporate finance ladder to become a founding and managing partner at Guggenheim Partners. Minerd was regarded as one of the most respected voices on the fixed income market over the last decade, and a much sought-after guest by financial media, including Bloomberg Television, for his view on markets. Minerd's first job was at Price Waterhouse, which gave him the opportunity to analyze hundreds of financial statements, something that benefited him later as CIO for Guggenheim. While still in his early 30s, Minerd became the global head of fixed income at Credit Suisse, working for legendary investor Bob Diamond. Despite his incredible early success, at the age of 37, Minerd decided to move to LA with plans to retire. But in 2000, Minerd met members of the Guggenheim family and became one of the founders of Guggenheim Partners. In a statement, Guggenheim Partners CEO Mark Walter said Scott was a key innovator and thought leader who was instrumental in building Guggenheim Investments into the global business it is today.
It probably affected the way I looked at all investments going forward, which was not to just listen to the conventional wisdom of what everybody else was saying, but to take what they were saying and, actually, really in reality challenge it.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, with a recent breakthrough, U.S. scientists were the first to generate a nuclear fusion reaction that created more energy than it consumed. Now, billionaires such as Jeff Bezos and Bill Gates are already investing in technology. We look at whether it's the answer to the world's clean energy needs and when it might be commercially available. Our Guy Johnson reports.
After more than 50 years of failure, scientists have taken a major step closer to achieving near limitless clean energy. On December the 5th, researchers in California succeeded for the first time in generating more energy from a fusion reaction than it consumed.
This fusion breakthrough will go down in the history books. This shows that it can be done, which has been a question. Can you get there?
Commercial viability is probably still decades away, but this new technology has huge potential. According to the Fusion Industry Association, each pound of fusion fuel could produce as much energy as 10 million pounds of coal. But what is fusion? Nuclear plants today use fission, where an atom is split to produce energy. Fusion does the opposite. Two atomic nuclei are combined to create a heavier atomic particle, with the reaction giving off energy. It produces no nuclear waste or dangerous radiation. A disaster like Chernobyl isn't possible. Billionaires like Jeff Bezos, Bill Gates and Peter Thiel are already investing, and startups have received almost $5 billion in funding, with Bloomberg New Energy Finance predicting $1 billion this year alone. But not everybody is a believer. Elon Musk, a co-founder of renewable company Solar City, has said that solar and wind costs are falling so fast the fusion energy will be a dinosaur by the time it's viable. But for now, the breakthrough has sent a major jolt of excitement through the scientific community, energy that surely won't go to waste.
Bloomberg's Guy Johnson there on the future of nuclear fusion. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The House committee investigating the January the 6th attack on the U.S. Capitol has delivered a scathing report blaming, quote, one man, former President Donald Trump, for inciting violence in an attempt to hold onto power. The 800-page report details Trump's behind-the-scenes fury and his efforts to pressure state officials and the Justice Department to overturn the president's presidential election. Now, Bloomberg has learned that China plans to cut quarantine requirements for overseas travelers from next month. Under the new rules, arrivals from abroad will only be subject to 3 days of monitoring. China currently requires travelers to quarantine at a hotel or other facilities for at least 5 days after their arrival. And a once-in-a-decade winter storm is battering much of the U.S. with snow and also freezing temperatures. More than 3,500 flights have been cancelled so far, with those through Chicago and Denver the worst affected. The American Automobile Association says more than 112 million people plan to travel at least 50 miles at some point, and that's over the holiday period. Inflation in Japan has further accelerated to the fastest pace, and that's since 1981. Consumer prices, excluding fresh food, climbed 3.7% in November from a year ago, matching the estimates. The data may fuel speculation that the BOJ will surprise markets again with more policy tightening earlier in the new year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. That's your Bloomberg First Word News. Now, some of the movers that we need to watch out for, again, it is quite thin volumes, but I love the story. First of all, Bavarian Nordic, really a must-watch today, entering an agreement with the U.S. Department of Defense for vaccine development. The stock is gaining some 5.9%. We should probably talk about Bavarian Nordic more than we do in general. Philips saying that tests on recalled products are showing the limit of the health risk, so that's also getting a boost. Philips gaining some 2.7%, and then Sodexo down some 4.1%. This is a huge catering company that also feeds our troops abroad. Now, let's also take a look at some of the key things that we're watching out for today. We've already had an update on the Spanish economy with GDP numbers coming in as expected. 1:30 p.m., we get a fresh batch of U.S. data, including consumer income, home sales, and durable goods. Later at 3 p.m. UK time, there's more data out of the U.S. with the latest release of the University of Michigan Consumer Sentiment Index. And then, of course, it's another day of strikes across Britain, this time from border force officers. About 1,000 of them are walking off the job today, creating potential travel chaos at airports around the country. Now, coming up, fancy setting up a new business in the new year? Well, we speak to the co-founder of organic chocolate brands Green and Blacks on starting out in a downturn and the headwinds facing businesses in the current environment. That interview is up next, and this is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
multi-trillion dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
No holiday cheer. Global stock markets are mixed ahead of U.S. inflation data. Tech faces its worst December since the dot-com bubble burst. Bankman-Fried bailed the FTX co-founders, released on a $250 million bond with the stipulation to live with his parents as he awaits trial. Plus, China's soaring COVID infections are keeping people home and causing a slump in travel and economic activity. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, despite the current economic climate, nearly 1 in 3 people in the UK have either started their own business or considered doing so in the last year. That's according to new research by accounting professional body AAT. It's something that the Green and Black's co-founder is no stranger to, having set up the organic chocolate company during the early 90s economic downturn. Well, I'm very pleased to welcome Joe Fairley, co-founder of Green and Black's. Joe, first of all, really congratulations on building this brand into one of the most recognizable chocolate names out there. What kind of advice would you give to entrepreneurs that want to do something, but actually the economic climate is very tough for them?
I think that actually a tough economic climate is a really great opportunity for startups, because a lot of the big businesses are very nervous. They've got their finger on the pause button, waiting to see which way the wind blows. And actually, when you're a startup, you can just literally, you've got your goal, you keep powering forward, and you haven't got anything to compare the current trend to. So I see a lot of dynamism during recession times, while the big guys are kind of twiddling their thumbs and going, oh, let's see how this pans out.
So, Joe, when you look at everything that's going on at the moment, is Green and Black actually recession-proof? Is chocolate in general recession-proof, or do you have the same kind of inflationary pressures as other markets do?
I think the great thing about chocolate is that it is a fairly low price treat. And actually, at times of recession, we want to have those treats probably more than ever. A small treat as opposed to, a big piece of clothing or something. So I think that chocolate is probably recession-proof. But I do see that there is a strong trend towards the kind of chocolate that we pioneered and that we still make today, which is ethical, sustainable. During the pandemic, people had a lot of time to think about where they wanted to spend their money. And I think that is only going to continue, because we are going to be spending less. We are going to be thinking more about what we spend it on. And I think that notwithstanding a cost of living crisis, we still want to make sure that our money is spent in a good way, with heart.
Joe, does that change in a downturn? I mean, I'm not saying it changes, but actually, your high premium, top-end chocolate brand, will people still buy a chocolate brand that's, fairer and better for society, but more expensive if the recession hits?
We're just over £2. I don't think that's expensive. There's a lot of chocolate out there for £8 or £12 now that's actually the same size and the same cocoa content as ours, but doesn't have the sustainable credentials and is just, much, much more expensive. So I think we're in kind of, if you'll pardon the pun, a sweet spot. But, I really do encourage would-be business owners not to buy into the doom and gloom that is out there right now. As you said, AAT's study showed that 1 in 3 people want to start their own business. And there's actually, they've backed a brilliant website called informe.co.uk that actually has an ebook on there that people can download for free about how to start your business in 20 days. Now, we're going to have a few days off for Christmas, but if you were to restart on the 27th of December, by the middle of January, you could probably have something that was pretty much up, ready to get running. And I find that so exciting.
No, it isn't, and it's an amazing brand. I like to say, you say it's £2, but actually, I buy larger packs, so I've never paid £2. That's like, if you don't like chocolate, Joe, this is maybe, the problem, my problem anyway. When you see some of the inflationary pressures, what do you worry about the most in 2023? Is it the price of cocoa? Is it transport? Is it packaging?
I think that obviously transport has gone up massively. The price of containers, etc., is off the scale compared to where it was a few years ago. And for smaller brands, that probably means prioritizing certain markets over others because it can be more expensive to ship less stuff. And yes, there's inflation, but we have been here before. And what I would say to all business owners is keep the faith. Just take a lot of deep breaths, give yourself plenty of TLC, because I think it's very important to make sure that as a business owner or a manager, you have the resilience, the personal resilience to kind of weather the storm that we're currently experiencing. It's so important when you've got a team that depends on you, when you never mind your family, etc. I will be keeping my head down while powering forward. And I think the great thing about having a business that's been around for a few decades is what goes around comes around, and there will be an end to this. But as I say, for those would-be startups, I think it's a time of great opportunity.
Yeah. But it's hard. Sometimes it's lonely at the top, especially if you have everything on your shoulders. So how do you build a team? Like, if you need advice, if you're going through a tough time as an entrepreneur, who do you speak to? And, what was your relationship like with the banks at the start?
Well, the first 20,000 for Green and Blacks came from me selling my flat to move in with my husband, my business partner, and literally I had £34 left in the bank after I bought 2 tons of the first consignment of Green and Blacks. But what I would say is that it's incredibly important to have your finger on the pulse of where your business is financially. You need a great accountant. And what I see often in business, I was lucky. My husband had been in business before. I tapped into an existing distribution network that he had with his brand Whole Earth. But it's very hard if it's one entrepreneur starting up on their own, it's very hard for you to be good at both the creative side and the financial side of the business. And that's where a trusted accountant comes in, a professional who can literally let you know at any moment of the day or night what your cash flow is, what your projections are, how much money you've got in the bank. I know you can look on your phone, but how much is that really? And also, any bank that you are dealing with is going to want to know that you have that information right there.
Yeah. So, Joe, one of the other things I hear quite a lot from entrepreneurs or actually, venture capitalists wanting to invest is that there's a concern in Europe and in the UK that very good companies then don't become big quickly enough. And so there's, the first mover advantage, if you have a brilliant idea, is squandered compared to some of the US. Do we need to be more like US companies? Like, is there a UK advantage?
I truly believe in the kind of first mover advantage for sure. I think that I've founded 5 different businesses now, and they've all been the first of their kind. And I think that, that I have no interest in something that is a Me Too business. But I do think that if you've got a good idea, it's going to take a great deal of work to get it to a point where a venture capitalist is ready to invest. It took us 9 years. We sound like an overnight success, but venture capital came in after 9 years. It would probably be quicker now because they are more interested in getting in earlier. But that's where making sure that financially you have everything in place if you want that investment to grow is incredibly important, for sure. But any would-be entrepreneur who wants to build a global brand, it doesn't happen by magic. You have to roll up your sleeves. You probably have to make some sacrifices, and you do have to find a way of striking a personal balance whereby you're not running on empty while you're trying to build this.
And Joe, again, if there's a young entrepreneur or someone that's been thinking for a long time, open a business, What's the perfect mix? Do you start locally here in the UK and see what happens, or do you have to start trying to export quite quickly to be sure that you have that brand recognition?
I think you have to decide and you have to be strategic. I think the biggest mistake we made at the beginning was actually exporting to too many small markets too quickly, because each one of them proved to be as much work as, you know, sending 2 containers of chocolate to America. And, you know, that's as much work as sending a quarter of a pallet to Estonia. So, and I believe one of the best starting points for any business is to put yourself in your customer's shoes. And all of my businesses have been founded on maybe slightly arrogant principle that if I need something and it's not out there, the chances are that lots of other people feel the same way too. That way you can tap into your instincts, you can tap into your insights. You don't need a focus group. You know, if you can't find something, there's probably a business opportunity there.
I love that. Joe, thank you so much. Joe Fairley there, co-founder of Green and Blacks, joining us this morning. Now, coming up, how has this year fared for UK stocks? We discuss the winners and losers. That's coming up next, and this is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then betray you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci is really teetering on the brink at this stage.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, UK stocks have had a wild ride this year, but some have fared better than others. To tell us who sunk and who swam, we're joined by our stocks reporter, Joe Easton. So, Joe, clearly been a tough year for UK stock markets broadly. Which are some of the individual worst performers that stand out to you?
That's right. So a lot of these companies are really exposed to the high interest rates. They've got big debt loads and they've struggled to keep up those financing measures throughout this year. So some of the stocks we've got on the screen here, we're looking at Wetherspoons is a good example. Not only do they have quite a big debt load, but they're also facing this squeeze on both demand and also margins. The cost of keeping beer cold, cooking, that's all coming up given the energy price increase. They've been hit quite severely. Moonpig, look, birthday cards are pretty recession-proof, but the gifting business is not so recession-proof. People do tend to trade down when you go into recession, buy cheaper gifts. They've also been hit by a strike as well. That might explain why I've had so few Christmas cards this year. Maybe not, though. And also Synergen down the bottom. This was one of the best performers in 2020. It rose around 2,500% on a COVID-19 drug. However, in March, they announced that actually this drug doesn't work, and the stock sank and is now down around 93%. So clearly some individual names to keep an eye on, but also the ones that are exposed to the high interest rates are really the ones that have been hurt the most.
I'm terrible, Joe. I printed cards, Christmas cards, and haven't sent them yet. How about the most impressive winners of the year?
That sounds quite organised to me, I think, Fran, but I think some of the best winners this year, yeah, they're quite surprising, really. We had Balfour Beatty on the screen here. Now, most of the UK construction companies are really down a lot because they're exposed to the property market, the housing property market, which has really tanked. Balfour Beatty, though, they're building the High Speed 2 project, which will link London to Manchester. Might not be ready until 2033, so something to look forward to. But they're also expanding the Hong Kong airport as well. So just an idea how they're diversifying away from the main UK house buildings. Me Group, we spoke about earlier, a bit of a strange one. They run photo booths all around train stations and airports. So when you need a new passport, you go down there and try to look nice for a photo. There's been a big boom in passport demand over the past year. Around 10 million Britons have renewed their passports after the COVID restrictions were removed. So Photo Me, now known as Me Group, up around 80%, a pretty good return for those investors.
Joe, so which are the stocks that you think could be attractive in 2023?
Yeah, so I do think we could see a bit of a rebound in some of the domestic sectors, so the home builders, the banks, and also the retailers. But there's some really good specific names to look out for. So I think WH Smith, very well-known company that was absolutely flying before the pandemic, but then was hit by the travel restrictions, and that hit a lot of their sales around the airports and train stations. Still well below pre-pandemic levels, and some investors are getting more excited about that one now. That could come up. Gym Group, I know we'll all be thinking about the gym in January after we veg out over Christmas. That's at the lower end of the pricing point, so people are looking to cut back on their costs. But if you're at the lower end of the market like Gym Group, they might be able to maintain their membership numbers. And then finally, Restaurant Group, they own Wagamama and also some of the other chains like Frankie and Benny's. They've been hit hard by the recession fears, people cutting back on their spending going out. But as I mentioned to you earlier, I do love a katsu curry. So that, to me, is one of my favourite stocks out there at the moment.
There you go, Joe Easton, single-handedly supporting Wagamama. Thank you so much. With the very latest on stocks to watch for next year. Now, tech firm valuations have taken a beating this year as expensive growth stocks lose favour with investors. This has also hit London-based female-focused health tech company Elevie, which has suffered a big drop in growth this year. Bloomberg's Tom McKenzie spoke with the Chief Executive Officer, Tanya Bowler, about the challenges that the business has been facing.
Definitely slightly reduced expectations on growth. So having gone from, to be honest, around circa 100% year-on-year growth, this year we're looking at about 25%.
How well capitalised are you? How challenging is the funding environment?
I'll be honest, it has definitely been difficult this year. I think overnight investors have really moved away from anything with the discretionary spend. But for us at LV, one of our key channels also is health insurance, particularly in the US. So that's very repeatable and predictable income. So we've managed to weather that storm. Luckily, we have a group of investors who are there to support us for the long term.
Okay. And you mentioned the supply chain challenges. Are we at a point now where those have been addressed? Are we back to kind of pre-pandemic levels in terms of supply chain efficiency, or are there still areas that are holding back the business?
Yeah, there's still, I wouldn't say there's full efficiency across the supply chains in general within consumer electronics, but we have at least seen a real switch from there obviously being a real supply issue within Asia, particularly on components and manufacture. Asia has now ramped up to meet that demand, but we're still seeing a lot of inefficiencies.
I want to focus a little bit on the UK before we let you go. The regulatory environment here, you're a successful London-based European tech company with your roots in the UK. What more can this government be doing to support businesses like yours?
I think it needs the support at every different level. We have a really vibrant ecosystem here in the UK. We have a lot of experience in terms of both now on the investor side and on the other side of the table in terms of entrepreneurs. But for entrepreneurs themselves, we need more entrepreneurs to choose London as that place to set up their businesses. So, for example, entrepreneurs tax relief, that has been cut. I would suggest that needs to be there as an incentive so that entrepreneurs are choosing London over Paris or Berlin. After that, obviously, we need top talent, and for that, we need to be looking again at, the immigration and allowing the tech that we know we need the tech talent to come into this country. And thirdly, I would say in terms of trade, we need, we're a British company, we're exporting. We need the UK government to be looking increasingly at those export barriers that we're all facing now as British businesses.
So that's a nod to Brexit, the Brexit effects, and that is a negative, that is a drag on your business.
Absolutely. Yeah, Brexit has impacted all UK businesses who export into Europe. It's also just increased paperwork and bureaucracy in terms of how we can export, as well as obviously the increased taxes.
Are you able to quantify the Brexit effect on your business?
We haven't been able to quantify it, but for us, so essentially our main markets were the UK and the US, and then we had plans to go into Europe. But with everything that's been happening with Brexit, it just makes us relook at those plans and make different decisions.
Okay, final question. The UK Chancellor has said he wants to turn the UK into the next Silicon Valley. In your view, sitting here as an entrepreneur in London, is that realistic as an aspiration?
Absolutely. You know, we did our fundraise last year. It was the largest fundraise for Femtech. It beat anything in the US as well, and that just shows the level of commitment, investment, and passion here in the UK.
Well, that was Tanya Bowler, the Chief Executive Officer of UK-based health tech company LV. Coming up, it's been a wild year defined by lightning-fast inflation, a war in Europe, and recession anxiety. We'll look back at some of the biggest moments of 2022. That's coming up next, and this is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So 2022 was quite the year. Here's Bloomberg's 2-minute roundup. In January, the Federal Reserve laid the groundwork to raise rates to tackle the fastest inflation in a generation. Adding to global inflationary pressures, Russia's invasion of Ukraine. The attack began in late February and dominated headlines, from the destruction on the ground to U.S. sanctions on Russian banks and oligarchs. By March, attention zeroed in on the specific threats that Russia posed, restricting the flow of natural gas to Europe and attacks near a nuclear power plant in Ukraine. corporate drama started to pick up in April when Elon Musk made a $43 billion offer to take Twitter private, while Netflix reported a loss in subscribers and changed its strategy to embrace advertising. The theme in May, market mayhem, as the Fed boosted the size of its rate hike to 0.5 percentage point, sending U.S. stocks to 13-month lows, while a single trader at Citigroup made a mistake that sparked a flash crash in European stocks. Recession fears took root in June. Half the headlines of Bloomberg's 10 most read stories that month featured the R word. Another R word, Roe, after the Supreme Court overturned Roe v. Wade. Geopolitics were the big stories over the summer. The killing of former Japanese Prime Minister Shinzo Abe, and Nancy Pelosi defying China when she visited Taiwan. The UK lost its longest-serving monarch in September. 2 weeks later, the new Prime Minister unveiled unfunded tax cuts that caused the pound to crash. In October, Credit Suisse became a meme stock, setting new lows as some retail investors bet the bank would go bust, while Xi Jinping consolidated his power, adding more loyalists to China's leadership. Crypto winter arrived in November when FTX collapsed, destabilizing the industry. And by December, bankers were tallying up the costs from slumping markets, sparked by the Fed's rate hike campaign. Their wallets will take a hit as Wall Street firms prepare to slash year-end bonuses.
Well, that was Quick Take Scarlet Fu, reliving some of the biggest Bloomberg headlines from the last 12 months. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. FTX co-founder Sam Bankman-Fried has been released on a $250 million bail package after his first U.S. court appearance on fraud charges. A prosecutor calls it one of the largest pretrial bonds in U.S. history. The package includes a personal bond secured by his parents' house in California, where he is required to stay. His next court appearance is scheduled for January the 3rd. Now, BHP is to stand trial in the UK over a 2015 dam collapse in Brazil that killed 19 people. A judge set a trial date for April 2024 to hear the claim on behalf of around 400,000 litigants seeking an estimated £10 billion. According to the firm representing the claimants, it will be the largest group action in English civil court history. Elon Musk says he's not planning to sell any Tesla shares for at least 18 months. Speaking on Twitter Spaces, Musk also said he favors a share buyback once the company is more confident in the direction of the economy. The Tesla CEO has offloaded almost $40 billion worth of stock this year. Now, that was mostly to fund his purchase of Twitter. And that's your Bloomberg Business Flash. Francie.
Leanne, thank you so much. Bloomberg Surveillance Early Edition continues the next hour. Matt Miller in New York, Ed Ludlow is here in London, and this is Bloomberg. Fascinating entrepreneurs, because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by making, you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, and the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, I mean, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I mean, I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, you know, proximity is going to be key.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
Back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Our baseline is that the U.S. economy will avoid recession. We're going to go into a very sort of below potential growth rate scenario.
The recession is delayed primarily because of the lags and the effects of monetary tightening on the economy.
The worse the economy is now, the better the market can be, because the Fed will be able to lower rates even before renewed expectations.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 5 a.m. in New York, 10 a.m. in London, 6 p.m. in Hong Kong. These are our top stories on Christmas Eve. Among the biggest losers this month is Tesla. Elon Musk says he doesn't plan to sell shares of the EV maker for 2 years, although he's gone back on similar pledges at least twice this year. Tech bulls, by the way, faced their worst December since the dot-com bubble burst 2 decades ago. And today's PCE deflator could make things worse. Plus, Bankman-Fried out on bail. The FTX co-founder was released on a $250 million bond, one of the biggest in U.S. history. Welcome to Bloomberg Surveillance, the early edition. I'm Matt Miller in New York. Ed Ludlow is with us out of London today. Anna Edwards and Kaylee Lines are off on some well-deserved vacation time. Ed, what do you see in terms of the market setup for this, the last trading day before Christmas?
Yeah, I think we couch what's going on with thin volumes around Christmas Eve, as you put it. You know, there was some anxiety in the US session Thursday that spilled over into Asia. It's a story about good economic data out of the US enforcing the idea that the Fed will stay the course in its fight against inflation and continue with its outlook of raising rates. You look at the MSCI Asia Pacific down 1%. It's dropped in 7 of the last 8 sessions. Particular pain as well in the Chinese tech sector, where we're seeing some of that kind of selling reflected of those higher multiple stocks that are rate sensitive in the US. That carried throughout the Asian session. Inflation in Japan came in hottest since the 1980s, and it kind of reinforced this idea that the BOJ is set for this hawkish pivot. Earlier in the week has been the top story for markets. The BOJ reset the upper band for yields to 50 basis points, and there's this idea that actually they'll now go a little bit further in light of that inflation print. In Europe, okay, look, we're treading water, Matt. I know that you would rather be in Jamaica than here with me on the show right now, but Europe kind of feels similar. There's some green on the screen in continental and Western European markets, muted gains, thin volumes. You look at, for example, the Stocks Europe 600. Yet there's some weakness in tech as well, and some underperformance when it comes to areas like consumer discretionary. We've made a few attempts this week to kind of rebound, particularly those rate-sensitive stocks. I put the FTSE 100 up there. We're kind
kind of modestly higher as we have been all week, 0.3%. We're focused on strike action here in the UK, although there's no real read-through to what that means for corporate Britain. And then yields, there's some movement in yields, right? I think that we're still kind of make sense of economic data. The focus of PCE will be huge throughout the day. It's interesting because it is an important data print, even though, again, Christmas Eve. Happy Christmas.
Merry Christmas to you as well. Yeah, I mean, PCE, the core PCE deflator is what the Fed supposedly cares about the most. And we're expecting a reading of 4.6% today. Let's take a look what's going on in U.S. markets right now. Futures, a very little changed on the S&P after a sizable drop yesterday. I think we were down about 1.5% yesterday on concerns about the Fed and how quickly it would raise interest rates. You see investors selling, though, the 10-year bond right now, so the yield rising 2 basis points to 369.86, getting back up there a little bit. And NYMEX crude also continues to climb. Right now, 79.15, so really about the same level as we were 24 hours ago. When we looked at this, Ed, yesterday, we were just under $80 a barrel for WTI. But there are more questions about the reopening in China. Does that drive crude prices higher, or are the COVID infections so bad that the demand just really isn't going to be there? That's a debate, I think, in the market right now. And then Bitcoin, you know, maybe I'll stop showing this in the new year if it continues to hold at this level. There doesn't seem to be any movement in Bitcoin outside of the FTX story. Not a lot of drama in the OG crypto world. And of course, we're going to talk about the FTX story, but Bitcoin really is a separate issue. Global stocks saw their biggest weekly outflow on record this week. That's according to Barclays strategist Emmanuel Cao. Bloomberg's Valerie Teitel has the numbers and the reasons for us. Valerie?
Thanks, Matt. Yes, you're right. $42 billion was pulled from equity markets on the week ending December 21st. So that encapsulates the week after we had the hawkish ECB meeting, the Fed meeting as well. $42 billion was pulled. Now, 90% of that came from U.S. equities. I've got a chart here which is showing the S&P 500 and the NASDAQ index. They've had a dismal performance in December, especially the NASDAQ. We're now only 2.5% away from the year-to-date lows, Matt. How depressing for December. Santa clearly didn't deliver. My theory is that he was distracted by the World Cup. But I got the one thing that can maybe have stocks end the weekend, the year on a more positive note. The core PCE inflation number that you were talking about. The attention is really going to be on the core number month on month, Matt. It's going to, the consensus at the moment is for 0.2. Anything lower than that, I think, would buoy stocks at the end of this week and possibly into the few trading days we have next week.
All right, thanks to Bloomberg's Valerie Teitel. You've got a flight to catch, haven't you? You better get going. Elon Musk says he is done selling Tesla stock, at least for now. The CEO's offloaded almost $40 billion of stock this year, mostly to fund his purchase of Twitter. He made comments on a Twitter Spaces audio conference yesterday.
I'm not selling any stock for, I don't know, I'd call it a minimum 18 to 24 months. So you can count on me like no stock sales till probably, I don't know, 2025 or something.
Joining us now, Bloomberg Global Autos editor Craig Trudell. It's exciting because he was my editor for quite a long time as well. We're modestly higher now in pre-market, 0.8%. We snapped 5 days of losses on Tesla. My point is investors like what they heard. What did Elon Musk say?
I think they like what they heard, but to Matt's point earlier, this is a case of maybe third time's the charm, right? Where he said twice now before yesterday that he was done selling, and then he went on to sell more. So he at first in April sold 8.5 billion. In August, 6.9 billion. Both of those times is when he made his first statements that I'm done. And then he sold 4 billion more in November and 3.6 billion more this month. So I think that may help explain a little bit why, you know, we saw a positive reaction last night and maybe some of that coming down. The other reason that I would definitely be looking at what the stock does today is just, you know, the sort of downbeat view that he offered on the economy. He said, you know, he does expect an intense recession in 2023 and even likened it to being, you know, perhaps similar to 2009. So obviously, you know, that's quite a serious statement for him to be making. And you know, so it may be a case of a little bit of positive, but also some negative mixed in last night.
Does anything good happen anymore when Elon Musk talks? I feel like he's become such a pariah that I wonder if it rubs off in a negative way on the auto brand. I mean, is it going to become uncool to drive a Tesla now?
I think that even is a concern on the part of some of his biggest fans, and you heard it even come across on the Twitter Spaces last night. There was one of his big fans referred to the idea that he had a daughter who is trans and was really concerned about his jokey tweets about pronouns. We've also just seen this more than just anecdotal. We've seen this come across in consumer surveys and attempts to really get arms around what this is doing to the Tesla brand. And before all of the events of the last few months, this was the case where Elon was cited as a reason that people didn't have particularly fond feelings about the brand. So he can both be their biggest proponent, a big to his credit reason for why the stock was valued as highly as it was, but also he's been their biggest enemy and a headwind as of late.
All right, Craig, thanks very much for joining us. Craig Trudell there, our global auto czar, talking to us about Elon Musk, Tesla, and Twitter. Now, Sam Bankman-Fried was released on bail after making his first U.S. court appearance here in New York. The terms include a $250 million bond secured by his parents' house in California, which must be an awesome house. Let's get more with Bloomberg's crypto reporter, Katie Greifeld. So massive bond, and what kind of palatial estate do they live in?
The mind runs wild, but there usually is a mismatch between, huge bonds just such as this and what the actual equity being pledged is. I mean, $250 million, I'm sure there's houses like that in California, but the house that we're talking about here, his parents' house, it's around 10% of that figure.
Still.
I know.
They live in a $25 million house.
I'd like to see it. So, I mean, we'll see what comes of this, what comes of the plea, but we know that the terms of this bail package is that he has to stay in the house with his parents. He also has to submit to electronic monitoring. So we'll see what happens here. But that is the news of the day, of yesterday, in addition to the fact that we saw those former insiders, Caroline Ellison and Gary Wang, flipping, cooperating with prosecutors. What that means for the eventual plea that Bankman-Fried enters is probably the storyline to watch now.
We shouldn't make light of what's happening. Obviously, he's charged and indicted on some serious counts, but he does join this kind of select group of people. His bond matches Tom Barrack's, who was acquitted last month of those charges that he was trying to influence U.S. policy on behalf of the UAE, and less than Robert Durst, who posted a $3 billion bond. He's the real estate heir, but he was also charged with murder, so it's slightly different. The serious side of this, Katie, is we want to know what's going to happen to SBF for the days and weeks ahead, because we were kind of minutely following his travel from the Bahamas to New York. What is the process for him from now on?
So just to put that into context, that's important perspective to have. $250 million, that's one of the largest pre-trial bonds in U.S. history. In terms of what happens now, again, we're waiting for a plea. The next court appearance scheduled for Sam Bankman-Fried is on January 3rd. We're not sure, again, what plea he will enter, but again, Ellison and Wang did plead guilty to fraud charges, conspiracy to commit money laundering, and they are cooperating with prosecutors. Bankman-Fried, throughout his media tour before he was actually arrested just 11 days ago, was that this wasn't intentional fraud, it was more just gross mismanagement of the company. But again, with those two cooperating, it's hard to get more inner circle than those two. That case is a little bit harder to make now.
All right, Katie, thanks very much for joining us. Katie Greifeld here at the latest on FTX and SBF. I guess now we're just calling him Sam Bankman-Fried to be more formal. Coming up, Roger Hallam, Vanguard head of global rates, joins us as we see bond yields climb just a little bit. Did we see the peak in 2022? What are we expecting for 2023? And the impact of continued strikes on the UK economy. Sandra Horsfield, Investec economist, joins us to talk about what it means for the economy, already in a difficult position when nurses and rail workers and border force go on strike. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
They've raised their inflation forecast.
Firm and immediate action.
He wants to destroy my country.
Elon Musk to buy Twitter.
Overturned Roe versus Wade.
Boris Johnson will call it
Donald
quits.
Trump's plan to overturn the
Unprecedented
election.
search warrant at the home of our former
Queen
president.
Elizabeth has died.
Xi Jinping got his third consecutive term.
Pound falls to an all-time low.
The shortest ever serving prime minister.
President Biden and Xi shake hands.
FTX filed for bankruptcy.
The red wave that never was.
Protesting his zero COVID policy.
This is Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London. My mate Matt Miller over in New York. China's soaring COVID infections are keeping people home and causing a slump in travel and economic activity. The COVID wave has heaped even more misery on the global economy, which, according to Bloomberg Economics, is set to experience one of its worst years in 3 decades. Joining us now, Jamie Rush, Chief European Economist for Bloomberg Economics. Jamie, you've got the enviable job of telling us what happens to the global economy in 2023. Take it away.
No, it's hard enough watching that little clip on 2022. It feels absolutely exhausting, doesn't it? But I think so what are we looking at? China, absolutely right that on the impact of the unlocking on Chinese activity and the spread of the virus. It's just a reminder that the spread of the virus clearly has a big impact as well as COVID restrictions do. But I think for China at least, we're expecting that growth is going to pick up pretty fast over 2023, up to 5% next year instead of more like 3% this year. And largely that's driven by COVID restrictions being lifted. But I think if you look at the rest of the world, though, we are going to be slowing down fast. You know, the monetary policy tightening that we saw in 2022, we're going to be seeing the impact of that in 2023. And that explains why we're expecting the global economy to post really, really weak growth, weakest since 1993 if you exclude some of the crisis years.
Jamie, what does that mean for rates after, the worst year for rates, I guess, on record we're going to be looking at? What can we expect next year?
Well, I think, so we're looking at inflation being pretty sticky globally. And that's one of the things that we learned through the course of the year, was that it's not just the US experiencing a demand-led inflationary shock. We also have some underlying stickiness in the UK and in the Eurozone. And so that's why we've seen the Bank of England and the ECB pivot and dash to catch up with the Fed. Our view is that we're going to be looking at something like 5% for the Fed, 4%-ish for the UK, and about 3% for the ECB. But if I have to pick one where the uncertainty is greatest, I think it is the European Central Bank, because we just do not have the clarity on what's going on in the labour market, how much wage pressure is being generated there, and so there's risk that there could be a pivot in either direction.
Are there any tailwinds for 2023, Jamie? I mean, we've got these dour and depressing Merry Christmas, Happy New Year commercials, and then your forecast I heard on the radio this morning, and I thought, God, is anything going to go right next year?
Well, so we're seeing a much faster rollback of restrictions in China than was expected. So if anything, perhaps the risks to that side of our forecast is the upside. Other possibility is that somehow we just, how wrong were we about inflation in 2022? Well, we could be wrong about it in 23, but the other direction. And if we get that, if we see commodity prices falling back, if we see the defrosting of supply chains allows for price pressure to drop much faster than people anticipate, then maybe we end up in a world where the Fed has to cut next year and the very different outlook for the global economy.
Jamie, I think, it's the Friday before Christmas, and I'm not even sure who's on the other end of the camera, listening to this broadcast from a markets participant perspective. But top of mind, I suppose, Friday is PCE. In Europe, I saw some commentary from Louis de Guindos this week on sort of the messaging around 50 basis points. My question is, how much room is there for surprise from global central banks, really? Because I feel like I say the same, I report the same messaging from central banks each week, each quarter. We've not really gone off course despite concerns from the market.
Yeah, I think the Fed's been pretty clear, and even if they get a downside surprise to their PCE forecast, which is looking pretty likely, they know what path they're on. For the ECB, we're actually expecting a pretty big undershoot, both of the ECB's forecast and of consensus when the inflation figures are published for December. And so that could actually tilt the balance in favour of at least signalling that there's going to be a decrease in the pace of tightening over the coming months. So I think the ECB has a chance that things will actually change quite a bit in the first quarter.
Jamie, quickly, what are you hoping for this Christmas?
Oh, just a bit of peace and quiet would be nice, thanks, Ed.
I think that's top of mind for all of us. Well, Jamie, Merry Christmas. Thank you for joining us this Friday. That's Jamie Rush of Bloomberg Economics. And for more market analysis, you can always check out MLive Go on your Bloomberg terminal.
Ed, what do you want?
This is, well, I tell you what I want, a bit of sunshine. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg. Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London with Matt Miller in New York. Now, keeping you up to date with news from around the world, here's the first word. The House committee investigating the January 6th attack on the U.S. Capitol has delivered a scathing report blaming, quote, one man, former President Donald Trump, for inciting violence in an attempt to hold on to power. The 800-page report details Trump's behind-the-scenes fury and his efforts to pressure state officials and the Justice Department to overturn the presidential election. In China, soaring COVID infections are causing a drop in travel and economic activity. The latest high-frequency data shows less traffic congestion in major cities, fewer flights and fewer people taking the subway. Following the abrupt end to COVID zero controls, more cities have infections, leading to crowded hospitals and queues at funeral parlors. China's plans to cut quarantine requirements for overseas travelers from next month. Inflation in Japan has further accelerated to the fastest pace since 1981. Consumer prices, excluding fresh food, climbed 3.7% in November from a year ago, matching estimates. The data may fuel speculation that the BOJ will surprise markets again with more policy tightening early in the new year. And a monstrous once-in-a-decade winter storm is battering much of the central U.S. with snow and frigid temperatures. Thousands of flights are cancelled, with those through Chicago and Denver worst affected. The American Automobile Association says more than 112 million people plan to travel at least 80 kilometers at some point through the holiday period. Guggenheim Partners Chief Investment Officer Scott Minerd has died. Guggenheim says in a statement that Minerd died after a heart attack during his regular workout. He became one of the leaders in fixed income through the 1980s and 90s during stints at Merrill Lynch, Morgan Stanley, and Credit Suisse First Boston. Scott Minerd was 63.
Fixing things that go wrong and smoothing out bumps in the road is what customers expect from energy providers. And for Duke's renewable assets, that process is overseen from one room in an office building in Charlotte, North Carolina. Brian Savoy showed me around the company's Renewable Control Center.
This is where our operators are monitoring and managing over 5,000 megawatts of renewables across the United States.
How would this differ from like a conventional assets monitoring center?
Yeah, so assets, historically, they would have the monitoring center on site. So you might have an operator with screens, but at the site. Whereas this, we could do 90 sites. There's offshore wind, onshore wind, solar, and they're looking for the smallest change in output because every megawatt hour is money. When one of these assets isn't producing full capacity, we're putting another resource on, and we're having to toggle this on a consistent basis. And this, as clouds come, this is by the minute. This is not, or the hour it's off. No, it's by the minute, and then it'll fall, come back, and we have assets that follow this digitally as well, so that we can keep a consistent flow of electrons on the grid.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg. Top experts. Great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Tech bulls face their worst December since the dot-com bubble burst 2 decades ago, and today's PCE deflator could make things worse for them. Among the biggest losers, the other biggest losers this month is Tesla. Elon Musk says he doesn't plan to sell shares of the EV maker for 2 years, although he's gone back on that pledge at least twice already this year. And Sam Bankman-Fried is out on bail. The FTX co-founder was released on a $250 million bond, one of the biggest in U.S. history, although it's backed by a modest house in Palo Alto. I'm Matt Miller in New York with Ed Ludlow in London. Anna Edwards and Kaylee Lyons are off today. And Ed, as you would expect, we're experiencing extremely light volume today. It's the day before Christmas, so anyone in his or her right mind is off work today. S&P futures are currently up about 0.25% after a 1.5% drop in the cash trade yesterday, though we do see investors selling bonds. You can see the 10-year yield floating up a little bit, just under 2 basis points to 369.67. We will be asking the question today, was that the peak for yields that we saw at like 4.25% a couple of months ago, or what are we going to see in 2023 when it comes to rates? NYMEX crude is up 2% on the session, although at 79.17 a barrel for WTI, it's exactly where it was 24 hours ago. The question here is, does a reopening in China increase demand as more drivers get out there on the streets, or does the spike in COVID infections there cause people to stay home and actually act in a negative way for the commodity? Bitcoin, meanwhile, doing a whole lot of nothing, $16,865, pretty much as usual. Ed, what do you see in terms of the European trade?
Yeah, it's kind of interesting in the anxiety, I suppose, selling pressure that we saw in the US into Asia has not translated over into Europe. The Stoxx Europe 600 up 0.5 percentage point. I would point out volumes are about 40% below their average. This is Christmas Eve, as you put it, Matt. FTSE 100 up 0.4%. I only put that on the board because I think a big focus for us is the UK economy, particularly in the context of strikes. Not that that translates through to corporate UK, but it is interesting to see the FTSE kind of trickle higher over the course of a week. Yields, they're kind of inching higher, right? I think that there's a lot of emphasis on US economic data, PCE, here in Europe as well, for those that are working. I have no idea how many people are actually at their desk in the city of London and Frankfurt and Paris right now. But there's also, I think, a little bit of stress still about global central banks, the direction of travel, the messaging. We were kind of talking earlier with Jamie Rush, our European economist, about this, right? That there has been consistent messaging to an extent from policymakers. This week, it was Louis de Guindos of the ECB piping up about an ongoing 50 basis point increment going forward. But my question was, how much room is there for surprise? But all I'm pointing out is, amid thin volumes, amid everyone's mind kind of wandering into the weekend on Christmas Eve, those yields just inching a little higher.
All right, Roger Hallam, speaking of that, we're going to talk to him about yields. I'm going to put that question to him as well. Have we seen the peak in rates? What do you expect in 2023? Roger Hallam spent 20 years at JP Morgan Asset Management. He is now Vanguard's head of global rates, and he joins us to talk about this. Roger, great to get you on Christmas Eve. Happy holidays. First of all, thanks so much for joining us early. Did we see the peak at 4.25 in the 10-year yield? Are we headed down in 2023?
I mean, I think 2022 has clearly been a very challenging year for government bond investors. But I think the message from central banks, as you highlighted over December, has been that there is still likely to be further upwards pressure on yields, particularly in the short term, as central banks still remain very committed to fighting inflation. Only this month, we've had the Fed upgrading its projections of where it intends to take its terminal rate. We've had the ECB announcing quantitative tightening, and obviously the Bank of Japan has surprised early ending its yield curve, amending its yield curve control measures much earlier than the market expected this week. So I think there is still very much near-term pressure or upwards pressure on bond yields.
Why does the market find the Fed's forecast hard to believe? I mean, if I look at the world interest rate probability screen in my Bloomberg, the WIRP screen, I see the market is priced in a terminal rate of 4.5% at the top end of the range. That's below what the Fed has put out in its dot plot, below what Jerome Powell has told us at press conferences. Why do they seem to lack credibility when it comes to market pricing?
Well, I think there's two things. Obviously, the last Fed meeting came on the back of a second consecutive downside surprise in inflation. And when you look at where inflation swap forwards discount inflation to fall to mid-next year, it's towards 2.5%. We've also got some concerning anecdotals there around the labor market, and the consensus is that we're going to see a recession in 2023, and the market doubts the Fed's resolve to remain hawkish against a softening inflation environment and obviously a weak growth environment. But I think the Fed has tried to communicate, and I believe is credible in saying that it wants to take rates high and maintain rates high to squeeze inflation out of the system. It wants to avoid the mistakes of prior Federal Reserve governors of easing too quickly and seeing that inflation re-accelerate.
Roger, after the Bank of Japan earlier this week, which we'll talk about in a second, but we got back onto the subjects of trust and messaging from central banks. I think it was Jim Caron at Morgan Stanley who earlier this week said, you know, that the market is getting this wrong. They're mispricing. But part of the emphasis he put on is the market being too focused on when rates come back down. They're looking too far ahead. My question is, what's the relationship right now between the Fed in particular and markets? Why is it that there is this gap in pricing and in messaging?
I think it's that we've never had a recession that's so well forecast by the economics community, and the market has seen the Fed tighten with almost crisis-like speed this year.
Yeah.
And the market effectively believes, I think, that we haven't seen the full scale of the Fed's tightening feed through on growth. I think, yeah, there is that credibility gap, but I think the Fed is being quite consistent in its messaging. And I think for us, certainly in the near term, bond yields are going to have to reprice higher as the Fed delivers on its forward guidance.
The BOJ was a surprise, you know, resetting the upper limit of the band to 50 basis points. The inflation print in Japan overnight, I think everyone's kind of expecting a pivot now. What's your read on the situation in Japan?
I mean, I think the timing was a surprise, but the direction of travel, it wasn't. I mean, I think yield curve control is a policy that's past its sell-by date, both from a market functioning standpoint and also from an economic standpoint. From my perspective, there are clear parallels to what's happening in Japan around inflation compared to what happened in other Western economies a year or so ago. You've got a surge in goods price inflation towards 4%, food inflation is up towards 7%. Now, services price inflation is still relatively muted in Japan, but as Japan sort of completes its COVID reopening process, I expect to see exactly the same service price inflation surge. impacting inflation expectations, impacting that wage formation process. And I think that's why ultimately the Bank of Japan felt it had to start to move early. We think that when the new governor comes in the second quarter of next year, the Bank of Japan will determine its yield curve control policy, and that will keep JGB yields under upwards pressure.
What do you expect in terms of currencies, Roger? You spent a long time in charge of currencies in your for your previous employer. When you look at the pound right now, the euro, the yen, does anything stick out to you as exciting in 2023?
I mean, the dollar's been incredibly strong this year, driven, I think, by two key factors. One, that policy divergence between the Federal Reserve and the central banks and the rest of the world, but also by clear terms of trade impact. The high energy prices have taken lumps out of the European current account surplus and Japan's current account surplus. Now, obviously, those economies now run current account deficits. As we look forward, I think we're going to see more policy convergence between the Federal Reserve and what's happening in the Bank of Japan and the ECB, and that should lead to some degree of dollar weakness. Need to be careful there, though, because that terms of trade impact, which has sort of clearly hurt euro and yen performance this year, isn't really going away. We don't see a significant rebound in the balance of payment surpluses for euros or yen. So I think you should see some modest dollar weakness, but we won't be going back to the levels of the past few years.
Roger, thanks so much for joining us. Great to get your take. Roger Hallam of Vanguard, one of the few strategists who actually is also a virologist. I'm sure that's been very helpful over the last couple of years in this industry. Coming up, we're going to discuss the economic outlook, especially for Great Britain, with Sandra Horsfield, Investec economist, as the United Kingdom reels from strikes across industries. This is Bloomberg.
Top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Ed Ludlow in London with Matt Miller, who's over in New York. Now, today is the first day of UK border strikes at airports in London over an ongoing disagreement on pay. Joining us right now, Bloomberg's Ayman Farhat, who, by the way, was at Heathrow earlier this morning, where workers have started their 8-day walkout, which stretches through to New Year's Eve. What's happening on the ground there in Heathrow?
Yeah, so Border Forces, they had a walkout today. It's going to be 8 days over the Christmas and New Year period. The Army is actually taking the place of border officers at Heathrow this morning, checking people's passports. Not much disruption this morning at Heathrow, but there are already escalations being threatened by the union into next year, so we could see more action into January of 2023.
So, Eamon, what exactly do the striking workers want? We know that there's been incredible inflation in the UK, more so than in the rest of Europe and in the US. Are they just asking for pay rises to meet those demands?
Yeah, they're definitely asking for a pay rise. You know, the cost of living is hitting everyone very hard. You know, the people I was talking to today, these border workers, they're really feeling the effect. You know, they see people going every day on holiday, these happy families, and they're saying they can't afford to bring their family maybe once every 5 years, if that. They also can't afford their mortgages, their bills. They have to sell their houses, go live further away. So it's really hitting their pocket, and they just want to get a pay rise, and they want to go straight to the government to get that.
All right, Bloomberg's Eamon Farhat. Eamon, thank you very much for your on-the-ground reporting and also for getting back to the office so quickly for your report. Joining us now is Sandra Horsfield, an Investec economist. We've got to talk about the read-through, I suppose, between the strike action, which we've just put on the screen, you know, the breadth of it, but also where we are at the end of the year with the UK economy. I've actually never really appreciated or understood this, that, you know, there's data that came out last week about the depression in restaurant sales, for example, in that 1 week period, due to a lack of being able to travel in and out of London, for example. But when you sort of take a step back, does strike action have a long-term impact on the economy, on growth?
The impact of strike action is twofold. One, the direct effects, of course. Ambulance workers that aren't driving an ambulance aren't producing the output they would do. Royal Mail, similarly. At the same time, there are the indirect effects that you alluded to. For instance, the displacement. Commuters can't commute. They can't do their city centre shopping. They can't use hospitality in the city centre. That's much harder to quantify than the direct effects, though, because it may be that some of that is simply displaced. Right. So rather than going into city centres, out-of-centre shopping centres are used, hospitality near a home is used, etc. So the net impact may not be that large. Also, we have to bear in mind those who can work from home have found much more infrastructure put in place, obviously, during the pandemic to do so. So rail strikes, for instance, may not have quite the same impact as they would have done some years ago when it wasn't such an.
That's an interesting point, though, that, I mean, structurally, the economy has changed because of COVID in the last 2 years. That said, you know, as Matt and I have outlined, there is a reason that these strikes are happening, that because of pain, essentially, in the economy, inflation, cost of living, and then wage inflation kind of comes into that as well. What is your read? Give us your sort of top-line conclusion of where the UK economy ends 2022.
As we currently head towards the end of the year, we're clearly in the grip of generally cost of living pressures. Those have manifested throughout this year, and we've had unexpected cost of living increases, which is why wage settlements so far haven't reflected the sort of the price increases that we're seeing. So there are real losses had here. These real losses we expect to continue and to carry through into 2023. If 2022 was a year of inflation, 2023 may be the year of recession. So the question is, how much there do we get in terms of a loosening in the labour market, and therefore some reduction of these wage pressures, or just simply how much more pressure is there for catch-up in terms of price pressures?
Sandra, it seems to me, if this were a one-off, it would be easy to deal with, pay rise and done, right? But at least from my perspective here in New York, it seems that workers in London go on strike almost constantly. I mean, you've spent a couple of decades in the city. You did your degrees at the LSE. You know, rail workers are always going on strike. Are they kind of the boy who cried wolf in a sense?
I think that there are certain industries that are more prone to strike action than others. As we said, the situation is becoming more difficult because of those structural changes that we're talking about. So how does the rail industry deal with income effects that may come about due to shifting working patterns? How permanent are they? Perhaps this will change if more workers are coming back in to the office. So there's some structural questions that need to be asked that go beyond the simple wage negotiations don't reach a certain point.
Why push back against the nurses? I mean, the healthcare sector is one that I really really don't understand, especially after, everyone was in the streets applauding them throughout the pandemic, even conservative members of the government, and yet you don't want to give, as if nurses are overpaid, you don't want to give them a raise or ambulance drivers a raise. Is the money just not there in the budget, Sandra?
I think that is the main part of the problem. Giving pay rises to nurses is a different matter to giving pay rises to private sector workers because, of course, the cost of providing the NHS services isn't charged. So you don't get the risk of wage price spirals in the same way for the public sector, such as nurses. But the cost comes out the other side on the fiscal side. And there we have learned that the fiscal situation in the UK is very strained. Awarding large pay rises that are costly could spook markets yet again, saying, well, how are you going to fund this? Is it going to be yet more borrowing? We obviously know that markets have been very sensitive to that in the UK, given what happened in the aftermath of the Truss Kwarteng mini budget. And so that's an extra consideration specific to the UK to take into account.
Got it. All right, mini budget is a phrase I think has been etched into our minds forever. Sandra, great to have you. Thanks so much for joining us. Sandra Horsfield there of Investec talking to us about the UK economy in an incredibly difficult time. I think even relative to the difficulty we're seeing in other Western economies. In terms of what's going on in China, those difficulties may eclipse everything. We're looking at headlines coming across the Bloomberg terminal right now that say China estimates COVID surge infecting 37 million people a day. 37 million new infections a day, according to estimates out of China in terms of COVID as they reverse their COVID zero policy. We'll continue to follow that. We will also bring you what we know and what we miss about Guggenheim Partners CIO Scott Minerd. Died yesterday, or Wednesday, I should say, at 63 years old. We'll reflect on the life and legacy of someone special in the financial industry. This is Bloomberg.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Ed Ludlow in London. Now, Scott Minerd, who was regarded as one of the kings of the bond market during its 4-decade bull run, has died. He was only 63 years old. Bloomberg's Sonali Basak has spoken with Minerd and reported on him over the years, and she joins us now here in studio. Really sad announcement, I think, for anyone who worked closely with Scott. He was admired for his acumen, but also, you know, people just liked him.
Yeah, I've covered him for 10 years, and I think what's remarkable about him is that through good times and bad, good years, bad years, tough times within Guggenheim, he was always not only professional, but always had a really respectful demeanor about him. I also miss, you know, he would just call me randomly sometimes if he changed his mind about the way he saw the markets. He was so passionate about the job. I would just hear from him on a whim when he was ready to make any given pivot. I think 2020 was one of those more notable years, right? Because you had him warning about COVID back in February before the world shut down. And people were thinking he was crazy, he was paranoid, but then the world did indeed shut down. He had 10% of his portfolio tied to just airlines. And so he had to pivot very quickly. He was selling. And then I remember the morning of March 23rd when the Fed stepped in, he started putting $7 billion to work. And that one bet on high yields helped them beat 97% of their peers that year. So conviction is really what he is marked by. Sometimes he was right, sometimes he was wrong.
It's amazing his name as it stands in the market, right? I just want to say, Sonali, you know, I never met Scott. I was a viewer regularly of our Fed specials, right, of which he attended and gave his immediate reaction to the Fed so often. You wrote a beautiful summary, actually, of his life, if you don't mind me saying, and I encourage the audience to read it on the Bloomberg terminal. I'm a Californian, right, believe it or not, with my voice. He loves California. He was unusual in the sense that he wasn't interested in being in Manhattan. Just give us some of the details of his life and some of the things that you learned speaking to him.
Yeah, it's interesting because certainly we wrote that he was a Wall Street outsider who made it his home. And remember, he grew up son of an insurance salesman in coal mining country in Pennsylvania. When he came to Wall Street, he ended up retiring early, living in California, getting married to his now husband, who he's survived by. And I've got to say, whenever I followed Scott around, he had the strangest group of people around him all the time, this very eclectic crowd, not the typical Wall Street crowd. I'm talking about one day I'm with him and Sylvester Stallone is calling him for insurance advice. Or, for example, he was very close to Kerry Kennedy, and with the Ripple of Hope dinner every year was one of his favorite events. And Arnold Schwarzenegger, of course, as well. They shared a love of bodybuilding. Once I was trying to interview him at Davos, I hop into his car, and a Norwegian government official was in there too, and all of a sudden we're talking about everything from bonds to the Arctic, because that was another one of his passions, and he talked about it incessantly.
Right.
And so definitely a very eclectic person on Wall Street, and he will be very, very, very sorely missed.
Absolutely. Sonali, thanks so much for your reporting. Scott Minerd was only 63.
Every art institution I know of wants you to serve on their board, and you're very involved in the art world.
What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live, and it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
This is the most expected, most anticipated recession ever.
It'd be historically unique to not go into recession.
We do have the unemployment rate rising. That is enough of it's a high enough rate to cause a mild recession.
You'll see a recovery before you get out of the recession.
Our baseline is that the U.S. economy will avoid recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. We're looking at potato au gratin recipes as we stagger to the weekend as well. Lisa's looking to get away. Good luck with that.
Oh, thank you. That's such sweet wishes.
We welcome all of you on a Friday before the holiday. Yes, we're all off next week, which is a great and beautiful thing. Thank you to our staff for making that happen. But we have an overlay of things here. I want to get this out of the way first. We are thrilled that Bob Diamond will have trouble getting it out. We are thrilled that Bob Diamond will be with us in the 8 o'clock hour to speak of his dear friend, Scott Minerd. That's the first order of business. We'll talk about Mr. Minerd through the show. All of us here at Surveillance in absolute shock. No other way to put it. Also, we're in shock over the mother of all storms. I mean, people allude back to 1978, Lisa, and this is the real deal. It was a biblical rain coming in today.
Yeah, definitely, and that's going to freeze over and create a pretty treacherous situation.
There's the weather gloom. Can you see Lisa as a weather person?
It's going to rain
Folks,
for the rest of your life.
Worse than you can imagine.
Well, I mean, look, hopefully I get out. Hopefully you all get out. And if you had a flight, I hope it wasn't one of the 3,500 that have been canceled. This is going to be a busy moment, and everyone is trying to get away. Today, you cannot leave because there is important data. There is important discussions about how next year is going to be a pivot point in many different ways and not perhaps the way that people want.
As well as Bob Diamond, Michael McKee will be with us. He was missing yesterday, but it's important to get it up. And look at the data dump today that we have. Michigan survey that, okay, it was there, but now it's important. Durable goods, part of that GDP calculation, and PCE deflators, what Mike McKee's going to focus on.
And we'll walk through all of the data. It comes after investors just pulled the most ever out of stock funds in the past week, in the week through December 21st.
I missed that, really?
Yes,
really?
$42 billion from equities. This was from
Well,
ETF
that bill
data.
finally went to cash,
You also had money withdrawn from bonds. This is a question. have we reached the end of the withdrawal of free money, of the end of the tightening, or is this the beginning of a cascade that a lot of people are expecting at the beginning of next year?
So we're going to have an interesting show. We hope you stay with us through all of surveillance today. Are you doing the 9 o'clock, or do you exit right after the show?
I'm trying to fly out of here.
You're
so
flying out. Well, there's a lot of people making it up here in New York City, and we hope you are safe. I looked at Chicago. I think it was -8 with a wind chill -20, and you moved east to, say, Columbus, Ohio, 2 above 0, and it was 40 degrees in Pittsburgh. I mean, that's what we're dealing with here in heavy rains, and we'll get you through. On radio, Rob Carolyn will have important reports for you as well, and we've got Brian K. Sullivan up in Boston with us later on. What we're going to do here, because we have an optimist on with us, we're going to get Lisa to do the brief. I'll do the data. Why don't you do are you ready to do the brief yet?
Yeah,
or are you
sure.
still making it up?
Well, I'm always making it up, but what we're looking at today, there are some really important data points, and this is notable because it is light volumes and everybody wants to get out.
Data dump.
But it is a data dump. 8:30 a.m., a read on the consumer. We get U.S. personal spending and income for November. We have seen personal spending come off. Real personal spending is expected to just inch higher. However, the question here is the resilience and PCE core deflator. This is the key inflation metric looked at by the Federal Reserve. Yes, it's expected to come down, but not that much. There is not necessarily the downward trajectory that's as direct as with the broader CPI index. At 10 a.m., we get the University of Michigan sentiment survey for December, as well as November new home sales. How much does sentiment continue to bleed upward? We saw that in some of the recent data. And this particular survey,
yesterday as well.
Yeah, and it really tracks oil prices, gasoline prices. And so you might see that inverse relationship come through.
On the data front, I'm going to call it a churn. It's a bounce. Up big 2 days ago, down big yesterday, and right now fractionally up. Futures up 16. The VIX is really, to me, the VIX is telling of this December week. We ought to be out 23, 24. We are not. We're at 21.82 on the VIX. The Bloomberg Financial Conditions Index gives Chairman Powell accommodation, not restriction. Some curve dynamics, a little bit of a disinversion, I guess I'll call it. The 2-year yield, 4.28%, worth watching as well. And we note as we look at the data that John Farrell on his way to Cornwall is still moving past Bath and Exeter. Heavy rains in southern England.
Just wanted to let you know, the other thing on my agenda is at 2 p.m., the bond market closes early.
I did not know that.
It sort of marks a coda to a year that has been incredibly dramatic.
Okay, are we going to celebrate with an auction here at 1:59?
No, I'm not going to celebrate with an auction. We can celebrate with a tank. But I just wanted to say, it's been a remarkable move this month.
Can we get one of the, Amy, can we get one of the interns over here? Can you do an 8-page paper by 12 noon on why the equity market's not closing at 2? Do we have any idea why?
No clue.
No clue.
Can't help you.
It's good. News you can use.
Yeah.
Bond market closing at 2. John Stolfus knew that, chief investment strategist at Oppenheimer, OPCO, and we're thrilled he could join us this morning. John, what's so important here is you've been a bull with a select few others. You have maintained your bullish stance, and like an adult, you have the courage to move out the x-axis into 2023. We've done the same thing with the recession call. We've moved the recession call out into 2023. Is your bullishness and the recession call out, are they linked?
Yeah, I think to some extent, there is risk of a recession. We had that montage that you showed just a little between the points of the show in the commercial section. And everybody is speaking with great authority, whether it's those that believe we're moving into a recession or not. No one really knows. We belong to the camp that we think we might skirt a recession, or if we do a recession, it'll be relatively light. The economy's resilience is pretty clear by the economic data. If anything, good news yesterday turned into bad news for the market, as people thought it gave the Fed reason to extend raising rates for longer. And we'd have to think that, there's an opportunity as 12 months ahead of us to really see the markets come back. We don't think it's going to be necessarily a year of robustness, but one in which resilience shows that we can move back towards sustainable economic.
John, Lisa Abramowitz is too young to remember FIFO, LIFO, first in, first out, and all that. And there I was looking at Nike's inventory success of moving sneakers out after they bought too many or had too many during the pandemic. Well, how do you extrapolate the good news of FedEx and Nike a few days ago out into Stolfus optimism for next year?
Well, we'd have to say we think that's evidence of exceptional management teams utilizing technology to arrive at solutions to help them navigate through really turbulent waters. And we've seen corporations do this through the pandemic. Earlier, they did it through the financial crisis recovery period. And we think they're working on it right now. It's not that all corporations will succeed in that, but the better ones will. So that's one of the reasons, whether you're in small, mids, or large, or growth or value, we suggest you go for quality here.
One shift that we've heard in tone, John, is people pushing back their expectations of when the recession will start just because of that optimism that you're seeing in corporations. Is that a good news scenario longer term for stocks, or is that just a good term, kind of short-term trading opportunity?
I actually think it's a good term. It's good for the longer term in here. I'll never forget in 2009, we were early on the bullish call in 2009, and everybody was always looking for the next shoe to fall. It was always with an authoritative stance, and it just didn't really happen. And we think that this year, 2023, the new year, is going to be take it back to where we once belonged, in the sense that we're going to see fundamentals become more important rather than momentum and projecting anything negative today forward negative into infinity. We think better things are yet to come, and some of the evidence proves just in those two companies that Tom mentioned, it's good things can happen here with good management.
I want to pick up on what you said, that next year it'll be more of a fundamental story. Which stocks or sectors do you think didn't trade on fundamentals this year when we saw the biggest sell-off in equities going back to 2008?
You know, I've got to say, the first thing is to remember that the sell-off, the maximum drawdown, well, let's just say the total decline was about 48% in 08, and this year, where are we down 19% or so, 18, 19% right now, and we've been worse than that. But at the same time, this isn't 08. It's a very different structure that we have here. So we would have to say, when we look at the environment, it appears to us that there's a lot of opportunity for positive surprises coming out of this. Part of it is, we don't think Jerome Powell wants to go down as in history.
There you go.
The first Fed chair, it took us into a bad recession.
Right. John, big tech, final question. Big tech, everybody hates it, massively unloved. Stolfus on big tech.
Yeah, I really like big tech, but I like big tech, the big tech that is embedded in the daily lives of individuals and corporations, not from a social media perspective, but more towards manufactured products and equipment, very much the industrial sector. We like industrials because it's so heavily embedded with technology. So we like tech industrials.
Yeah. John, I know you can't mention individual securities, but hold still while I take a photo with my iPhone of you. John Stolfus there, not mentioning Apple. He's with OPCO, and we thank him for his optimism along with Binkham Chadha and others this year. John Golub was great yesterday as well. Can we just generalize that it, not to bust your chops, Bramo, but it's pretty gloomy out there. I mean, look at the bond market combined with the equity market. You got to go back 40, 50 years.
I actually don't think it's all that gloomy, considering what we just saw, which was a historic move away from easy money commentary. Yeah. Sure, but if you look at what people are saying, they're saying, well, perhaps recession's delayed, perhaps it's pushed out there, perhaps there won't even be a recession. The soft landing has made a rebound. We've heard this so much more over the past couple weeks.
I'm looking at the survey, Mike McKee again at 8:30. Personal income, I think it's a plunge, 0.7% to 0.3%. As well, I don't know if we have a shot of this yet. It's darkness at dawn for Lisa. She's traveling today. We are in torrential downpours here in New York. There's no other way to put it. Are you just
trying to troll me?
No.
There's no way I'm going to get out.
This is a shot, folks, from the top of Lisa's apartment. It's a really beautiful shot. We're going to send Shonali Bassick out to Roosevelt Field, but that didn't work out. She's going to join us later on Goldman Sachs on The View Forward on Wall Street.
You want to do like war correspondent commentary from the airport?
Yeah.
We're waiting in line.
That's where Lindbergh took off.
We're not sure whether we
Lindbergh,
can get out.
Charles Lindbergh.
Thank you.
Yeah, it was, a few years ago. Stay with us. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Elon Musk says he's not planning to sell any Tesla shares for at least 18 months. Speaking on Twitter Spaces, Musk also said he favors a share buyback once the company is more confident in the direction of the economy. The Tesla CEO has offloaded almost $40 billion worth of his stock this year, mostly to fund his purchase of Twitter. FTX co-founder Sam Bankman-Fried has been released on a $250 million bail package after his first U.S. court appearance on fraud charges. A prosecutor calls it one of the largest pretrial bonds in U.S. history. The package includes a personal bond secured by his parents' house in California. Its terms require Bankman-Fried to stay with them and submit to electronic monitoring. His next court appearance is scheduled for January 3rd. And Meta has agreed to pay $725 million to settle a long-running lawsuit that claimed Facebook illegally shared user data with the research firm Cambridge Analytica. Facebook users sued after it was revealed that the UK research firm connected to Donald Trump's 2016 campaign for president gained access to the data of as many as 87 million of the social media network's subscribers. A massive winter storm is hitting a huge portion of the central U.S. Thousands of flights are canceled. The National Weather Service says more than 200 million people, around 60% of the nation's population, are under some form of winter weather warning or advisory, wreaking havoc on America's travel plans ahead of Christmas. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
They've raised their inflation forecast.
Firm and immediate action.
He wants to destroy my country.
Elon Musk to buy Twitter.
Overturned Roe versus Wade.
Boris Johnson will call it
Donald Trump's plan to overturn the
unprecedented search warrant at the home of our former
Queen
president.
Elizabeth has died.
Xi Jinping got his third consecutive
The
term.
pound falls to an all-time low.
The shortest ever serving prime minister.
Presidents Biden and Xi shake hands.
FTX filed for bankruptcy.
The red wave that never was.
Protesting his zero COVID policy.
We believe we have real needs on the defense side now with Ukraine more than ever, but we believe there are just as many and just as important real needs on the domestic side. Now, we got a whole lot done here. The budget was bigger.
Senator Schumer, I believe a Democrat from New York, and we
I can confirm
wish
that.
him. You can confirm that. Abramowitz on top of the story this morning. The Senate Majority Leader Chuck Schumer there after a really interesting year in politics in America. Lisa wants to talk COVID in China. We're going to do that in a moment because this is a really burgeoning story. I just did the math. This is off of Google this morning, and this is the fiction that's out there, Lisa. China deaths from COVID 0. 7-day average 1. It is a fiction.
Well, and everybody it's an open secret that it's a fiction. Xi Jinping, the president of China, has yet to comment on this. And yes, they did pass the omnibus spending bill. The Senate did, and now it goes over to the House for passage. And that's why we have Chuck Schumer there announcing that. What's next? Tony Blinken, Secretary of State, was talking with his counterpart in China saying, let us help you. We are worried about the lack of transparency. We are worried about the virus cases ripping through the nation, the lack of information. This could
What can the Secretary of State do? I feel like we're talking about the SEC, Department of Justice, and Binance. Okay, great. Wring our hands. What can we do?
He's saying, please, let us send you some gear. Let us send you some vaccines. Let us help you get this under control. We dealt with this also. They haven't gotten anyone to take them up on that.
Well, I think it's coming out of anti-science to be optimistic, and we'll have to see. It's a story unfolding, and of course, into this weekend, I'm sure it's going to be a full-time effort for everyone as well. Futures up 12, Dow futures up 111 this morning. There's trading. Bramo reporting, surveillance reporting the bond market closing at 2 p.m. As well. And then they stagger into the final week with the bond price down, 15% on a blended basis. Bloomberg Total Return Index, worst case for the year.
Yeah,
a little bit of a bounce.
Yeah, and worst performance going back decades and decades, questionably, whether potentially ever.
Yeah. We'll have to see right now. I think we've got. Do we have Terry Haynes, Amy? I haven't heard from Amy. I'm looking at the control. Oh, the control room's out. Okay, we have Terry Haynes. Terry Haynes, thank you so much for joining us with Pangea Policy. And I want to talk about the philosophical idea, Mr. Haynes. This is reporting. This is out of the Post. But Bloomberg has it as well. Basically, selected Republicans sat on their hands for Mr. Zelensky. Bobert Getz, Burchett, others didn't even bother showing up as Mr. McCarthy played with his microphone stand. And what I find fascinating, Terry, is the Post does a body count and says a few Republicans felt that way, as you said to us a couple days ago, and yet I see out in the Republican zeitgeist that this is a huge opinion of Republicans. Which is it? How narrow is that part of the Republican Party?
Well, good morning, Tom and Lisa. I think what you get here is a situation where you've got sort of fringes on both sides. We've long talked about the four factions in the Congress as opposed to the two parties. And what you have is four factions here. What Republicans, I think, want is they want accountability on Ukraine funding, and that's fine. They can get that in a variety of different ways. But they're also trying to make political points. Shocker, I know. But political points on fiscal restraints, too much debt, that sort of thing, and so I think that's where you see the fill-in more than anything else.
Well, to drag us into next year, Mr. Haynes, if the most interesting battle, we don't know what President Biden's going to do, but if it's Republican, the fact is President Trump has a core Republican constituency of a certain size. Do you, as a grizzled pro, think they will actually switch their creed, their faith, their religion over to somebody else? I mean, are they going to shift?
I think some of them will, yeah. My view now has been for a while that I think President Trump has really jumped the shark on it politically. And it's a combination of two things. One, it's a combination of the January 6th and post-January 6th behavior. And that's combined with the fact that he's now committed the other unforgivable sin in politics, which is he's a serial loser. And going back to the 2020 elections and now most recently the midterms and the Georgia runoff. So what you have here is somebody who is among other things, suggesting that the Constitution should be suspended to accommodate his theories about the 2020 election, plus being a serial loser. Republican Party's been trying to get past Trump for some time, and this combination has only made things much more urgent. So, yeah, I think they do. And they're engaged in a dance to try to keep as many of those Trump-like supporters as possible, but they have been for a while. I think they get some of them, yeah, but it's to the point now where Republican leaders think it's more important to preserve the brand than it is to worry over much about Trump.
We strip away the political drama. There is a question after 2022, what will be the main issues, the main flashpoints, the main economic challenges in 2023, which was the reason why I was pointing to the story of China and the U.S. pushing them to accept aid from the United States to try to curtail some of the virus spread. How important is this story, do you think, in shaping 2023 politically?
Oh, I think it's very important. What you have is a situation where, the overture from Secretary of State Blinken shows that the United States continues to be very interested in constructive engagement with the People's Republic of China and with their government, and wants to be helpful wherever it can. There's a subtext here, of course, which is, we can help you means they can't help themselves to some extent. And, that's a problem, as you pointed out, that the Chinese government probably can't get over quickly or easily. But nonetheless, it shows an outstretched hand. It shows a concern for the humanitarian side of the tragedy that's been unfolding in China in some time. That's all to the good. But what you see is kind of the push-pull of U.S.-China relations. And, I think that'll continue, and it is very important for 2023.
What about immigration? And I ask this because we have been talking about the worker shortage, and yet there still is this fight over the legacy COVID-era immigration restrictions left over from former President Trump's reign. How much do you see Republicans getting on board with Democrats in 2023 on allowing more immigration?
I think I think the immigration policy in this country is broken. That's obvious. What's a little less obvious is it's been broken for almost at least a decade now, frankly, at least a decade. The last time the parties tried to engage constructively on immigration policy was back in 2013. Since then, they haven't, and that's to the country's detriment. As a citizen, I certainly hope they will. But there's a gulf between the two parties on lots of things, including a path to citizenship. The last time this was engaged with constructively, there was a centrist coalition that really tried to bridge the gap. That's going to be very tough in a world where you have, the two of the four factions being progressive Democrats who want to liberalize immigration and more conservative Republicans who want to not restrict immigration but put stricter controls and on making sure that people are in the country legally. It can be done, but it's going to take a huge amount of effort. The Supreme Court may well kick that off with a ruling on Title 42 here over the coming weeks. So I'd look for that sooner rather than later.
Terry Haynes, thank you for the brief on this Friday of December. Mr. Haynes is with Pangea Policy. This happened overnight. I wasn't even aware of it until 10 minutes ago. Last season, Lisa, my absolute favorite baseball game of the year was a guy pitching for the San Francisco Giants who looked out of 40 years ago. His name is Carlos Rodon. And I'm not stunned, but here he is signing with the Yankees. The Yankees win. There's no other way to put it. This is a spectacular. This is as important as signing Aaron Judge.
Well, and Yankee fans had, before he even signed, sent him money through Venmo to try to get him on, to try to take matters into their own hands. I love that.
I would pay $1,000 to see Rodon go after Verlander and Yankees Mets. Good morning.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.